everyone. Welcome to Drinks and Mics, brought to you by Nairametrics. Of course, I remain Ugo Dre. And you're all welcome to the live audience edition of Drinks and Mics. Of course, I have here with me the usual gang is in the house. I'll start with, the people that matter first, and then we'll go all the way back. So the last person is drawing the least.
Jesus.
The least is just the way things are. So I'll start first with my man, Otumba.
I'm the smallest.
Yeah, I was the most powerful. So that's Otumba Delpi, the only Otumba in the house, by the way. And then we'll have the fake one, but he's relinquished that.
No, he's a sir.
Yeah. He relinquished it.
Say how it is.
So that's our, fakes are Arnold Dublin Green. Right, and of course we have the youngest in the house, the baby of the house.
I don't understand where this thing. This is
the baby of the house, Tunji Andrews.
Yeah.
Baby of the house. All right, welcome everyone. So glad to have you guys on set. So if you're watching, online, we have an amazing, guest here with us, not in the studio. By the way, if you're wondering where we are, we're somewhere in Lekki. We're not going to name where it is, but it's a very coded
Otumba doesn't like
place.
doesn't want it to be known.
The gist is that you can't find it on the map. Yeah, you actually can't find it on the map.
Actually,
we only released it today.
It.
Yeah, but today, only for today.
Someone has added it on the map.
We have to take it out.
Sadly.
Yeah.
Best kept secret of Lagos.
Yeah.
I'd say.
Yeah. So for those who haven't been here before, so this is the home of one of our sponsors, Lead Drop, who of course we often mention on the show. So Lead Drop has been our drink sponsor right from I think the third or fourth episode or so. Yeah. And then we also have supporters as well. Swan, owned by UAC, supporting us all through the session. And then we also have Cowrywise, one of our supporters as well. And of course, Bamboo, the go-to app for investing. So those are the sponsors that we've had. Bamboo, Cowrywise. Of course, you can also use Cowrywise for investing too.
Let's not forget Codros.
And
Codros, of course.
I don't know. Codros just always sounds like a shameless plug to me. Plug it anyway. I plug us anyway. But of course, we also have CFG as well as one of our sponsors. So in typical fashion, this is Drinks and Mics. So we like to start with our drinks before we go right into the discussion today. And as usual, the youngest will pick the drink and give it to the oldest to bless. Because tradition matters when it comes to drinking. So, just do what needs to be done. Yeah, I mean, the elders in the house understand now.
At this point.
He gave it to the elders to bless.
At this point, it's bullying.
Give it to Otumba now. At least an Otumba. At this point, please, let's all feel free to open our drinks. It's Drinks and Mics, so we've got alcohol on the table. So if you're one of those who don't drink alcohol, we know some of them here who don't take alcohol. There's water for you to take. There's Sprite. There's Coke. Juice as well, I think. You can also order juice on the house or in the house. All right, so it's going to be an interesting session today. We're having two sessions in one. We would have a special guest as well, one of our favorite guests on the show. He's going to be joining us very soon. He's in the back room there. But we just want to start basically with a recap of Drinks and Mics over the last 8 to 9 months. Maybe
29 episodes.
Yeah. So I want to start with Arnold because I think Arnold has been the only member of the team who hasn't actually missed a single episode.
Yes.
Not one. Yeah, he's inconsistent. Yeah. Just like money.
There was a time Ugo Dre went to Miami and
All right, Arnold, let's start with you. What's been like your favorite memories of Drinks and Mics so far?
I think for me the highlight is the first one with Samson.
Oh.
Yeah, when we were going back to back on FX on Naira.
And you kept digging in.
Yeah. And when I first started as an investor, as a trader, my mentor at the time always said to me that in this game you try to be right, but it's okay to accept that you can be wrong sometimes. And unfortunately, I took the other side of the conversation or of the trade where I was short naira, and I was so determined and so sure that the reforms wouldn't kick in, the FX reforms wouldn't kick in, and there would be a huge flights or exits of FPIs when the world falls apart. So when anything happens, and the naira would weaken, but it didn't. And I was wrong with that. But that that episode was actually my favorite episode. Just seeing on the other side, because in my mind, everybody
let's
has
make it known that I was the only one on set who bet on the naira. You all remember, right?
Because you and Samson,
but Tunji, don't think about it. You were against the naira.
You're still against the naira.
Tunji was short the naira.
Yeah, I think we're still short. I think everyone is still short, right? Or rather, we're long because we live here, but generally you're short.
Yeah, I'm still short-term long. I'm still short-term short the naira.
We're gonna get there. Don't worry. We'll get to naira gist. What else? What else was your highlights?
I think apart from that, every episode has been great for me, man. It's been an opportunity to drink and hang out with friends and talk markets, which is my two favorite things in the world to do. So it's been everything has been great.
Tunji?
It's all been great.
Highlight for me has been the episode with Madam IJ.
I don't know who watched that episode though.
That was the episode that made me feel like I wasn't crazy. Because she kind of echoed everything my thoughts. In fact, I'm not sure I talked much on that episode. I just kept going, yes, I agree.
By the way, that was the episode where we had Ijema Wagugu, in case you're wondering who that is. She's the CEO of Arise TV. And she unloaded on Buhari, RIP. And Buhari was alive then, though. So, she unloaded on him.
But also, I enjoy every episode because of the comment section where Tunji should just shut up. And I'm like, leave me alone. No.
The nation's uncle.
So I enjoy it.
So I think, when obviously you guys started the program before I joined. And for me, when I watched it, I realized that history or what we go through or what's happened in the past is not being documented or hasn't been documented. Some of the stories that our fathers and mothers went through. So one of the things I asked myself today is, how in my life did I ever vote for Buhari? Right?
Now, you're one of those who voted for him.
I was first term. And for me was, if we had documented that part of history where my parents talked to me about how
how it was in 83.
They queued for rice, they queued for milk. Then in what world did we think that this
guy would do something
different, right? So I feel like the platform gives us an opportunity to tell war stories, especially in the financial markets, where we can pass on knowledge from what we've done with our lives to the younger generation, whether in our career experience or just passing on knowledge, right? Again, we don't have to be right. We're here to just basically banter about our views, and people can make their own decisions. But that's really been my own passion around why I'm doing this or why I feel this is very important, a very important message for the generation that's watching.
Fantastic. So, I think there were a lot of interesting memories for me over the last year. We had amazing guests on the show, from, like you mentioned, Madam IJ as well. I think Chika Bono was also very interesting guest. Rolake was fascinating as well.
Bucci was exciting because I got to see crypto.
Bucci schooled these guys on crypto, by the way. Bucci, because they didn't know anything about crypto. Tunji was always just running his mouth on the show about crypto. Until Bucci came in and just sort of schooled him, And then Andrew Ali was great as well, because Andrew Ali was said, for the first time, Arnold was quiet. And Tunji, they were just saying, yes, sir.
No, but Arnold is...
Yes, sir. Yes, sir. They were intimidated.
Andrew Ali is a boy.
They were schooled,
Absolutely.
Yeah, they were
Arnold was starstruck.
I was starstruck.
Yeah,
I was. He's someone I've looked up to for a very long time.
Yeah, and the ladies in the house too were good. Ola was great. Remember when we had Ola as well?
Yes.
Ola was great. Was great on the show as well. Who else? I think it was
Not Olumide.
yeah.
of course.
Oh,
Shirombo
yes. The
Shirombo
war
was
stories
great.
of
Yeah.
investing in startups. Yeah.
Shirombo is one of those, investor kingpins that we had in Nigeria here, and so amazing show so far for me. But I think, Sam of course, Sam is part of the house now.
Yeah.
But I think for me, one of the biggest coups was getting this guy here on board, right? On board, yeah. Just a little bit of history. Drinks and Mics actually started maybe 11 years ago. A lot of people who may not know, and it used to be called something else, and it was when podcasts wasn't really popular. It was me, Tunji, and you guys need to. I wish. Do we have picture of Tunji like 11 years ago?
No, please.
He was nothing like this at all. Don't even like.
Let's not do
Babarik,
that.
you know now, Abi. You remember him?
No,
he was nothing like this.
Stop. That was
absolutely nothing
let's
like
stop,
this.
Let's stop.
And then when he started making money, he just started going to gym every day. And all of a sudden, guys now feeling like
getting tattoos.
I will catch everybody that has those pictures.
And then we sort of like kept that in the cooler because Nigeria wasn't ready for podcast. And then Arnold comes along and says, "Hey, why don't we do a podcast together?" Tunji too comes along and says, "Why don't we do a podcast together?"
And I was actually here in this.
Yeah,
in this,
we talked about it here. And then one day, like, light bulb moment comes up and I say, "You know what? It's going to be called Drinks and Mics." So I messaged them and then they were on it. And then, of course, he wasn't around. I mean, for those who know Otumba very well, he's one of those guys who spends a few days in Nigeria and, most of the other days in the Caribbean. Living the dream. Triple beam tree.
I wish I was.
So one of those days when he was around, brought him on board as well. So it's been an amazing session. And most importantly, I think a lot of the guys who watch Drinks and Mics from every part of the world, it's been amazing. The feedbacks that we get. I mean, I can only just imagine what season 2 will look like. Yeah. So now that we have that out of the way, we're going to start straight up. There's a lot to discuss today. A lot of debates, a lot of things we're going to talk about. The news cycle was hot last week, but we're not going to focus on this weekend. We're going to talk a lot about a lot of stuff, particularly where to invest over the next few months as we go right into the second half of the year. So it's at this point that we're going to welcome our first guest on the show, our main guest on the show, the one and only Sam. Is Sam around? And at this point, Otumba will just would exit for a bit for Sam to come in. So we're going to have Sam come in.
Sam is eating.
No, Sam can't be eating. Sam is probably making money. That guy makes money every minute. He's probably looking for something to invest in.
My name is Moyo, and I work as an accountant at a small business in Lagos. My kids have a nickname for me, Iron Lady. They say I'm always so strict with money and finances. They like to spend, and I like to save. So imagine my surprise when I overheard my kids talking about investing and putting aside money. I joined in on the conversation, and they showed me the Bamboo app and their own portfolios. I was shocked. So I asked them to help me download and sign up. I was worried. I started investing a bit too late. But with Bamboo, I've learned it's never too late to start investing. My goal right now is to leave a very, very healthy portfolio for my children to inherit. Don't tell them I said that.
What's happening in MAGA world, though? The guys seem to be a lot of.
I don't know.
turbulence.
I'm not. You people made me. You people made me MAGA. I wasn't. I like the guy's ideology. He could be crazy sometimes, but yeah, I'm not necessarily MAGA.
Anyway, let's just pretend like we didn't hear that.
Nope.
So let's welcome Sam.
Sorry.
I think you should do an introduction to the house. Who are you?
Yeah, hello everyone. My name is Samson Esemwede. I'm Managing Director, Chief Investment Officer for Zroski Investment Management Limited.
Fun fact, so Sam came on after the first episode, so we now got Sam back. Because we tend to do this buy, sell, or hold internally, whether we want to have the guest back. So we did, I know, because Sam was all buy. And then we got Sam back for the second episode. And Sam came in that day and said, man, I was just going on my own in church. And then some guy walks up to me, Sam. And he's wondering, where do I know you from? And the guy said, Sam, drink some mic. Like, guys, man, if this is how this is, I don't want it.
It's even crazy. In Turkey, I was on holiday with my family, and the airport, transitioning from one flight to the other. Some guy ran up to me and was like, drink some mic. I'm like, all the way in Turkey. So I think it's giving me the fame that I've been trying to avoid all my life. So.
All right, guys, so let's dive right into it. We're going to start first with the macros. There were a lot of numbers that were out this week. This week especially. A lot of stuff has happened from last week to now. I hope we can dive into those things. But let's start with the macros first. GDP numbers out yesterday, I guess. Yesterday being, day before recording. I don't know if you guys have seen it. First time we're seeing rebasing numbers. A lot of people felt a little bit underwhelmed by it. I don't know what they were thinking. Maybe they thought this was going to the rebasing will make us Africa's largest economy like it did the last time. Fortunately, nothing moved. We're at 370 trillion right now. We saw a lot of big moves as well. Trade is now the largest subsector in the economy, taking off crop production. Crop production is now number 2. And I think real estate from somewhere, nowhere, just
all of a sudden, right?
Jumped into the top 5 largest economy. Yeah, third or fourth or so largest economy, largest subsector in Africa. So Sam, I'm going to come to you first. What's your reading of these GDP numbers?
For me, I thought it was a bit depressing, and I would explain. Usually, when an economy grows, right, the agricultural component of GDP shrinks because the agricultural economy becomes more productive, and the manufacturing component of GDP expands, right? We saw quite the opposite with these numbers, actually. So agriculture increased. I don't think that is positive. I think the agricultural sector of your GDP should reduce, and labor intensity of agriculture should reduce as the economy evolves.
Becomes more mechanized.
So what these numbers demonstrated to me was basically the bastardization of the economy that we've experienced over the last decade.
Yeah.
And it came through in those numbers. And for me, that was actually quite
You guys allow Buhari die.
Blame him
Never allow him die in peace.
Yeah, so I did think it was I don't, from an economic perspective, right? Because most of what I do is very bottom up, right? So what a GDP rebasing does is just statistically captures parts of the economy, because the economic structure changes as you go forward in time. So things like the digital economy indexes more, the pension fund industry indexes more, things like fintech and stuff, which is part of the indexes more. But really, that underlying economic reality is there.
Yeah.
Right. So sometimes I find it really weird when people say the GDP is now bigger. The GDP has always been there. It's just that it's now being captured.
Yes.
Right.
Yes.
But doesn't that also show, but the fact that it's being the digital stuff is getting captured, doesn't that show modernization?
No, it does.
But that's what I took, especially from the rebase.
Yeah, but somebody's already capturing that top line. So it's not like the numbers didn't just appear out of thin air, right? So yes, you might not have captured it in original data, but basically what it is GDP is basically your above top line, so to speak, right? So it's the value of services, added value of goods and services that's consumed within the economy at that time, right? So the fact that somebody has that consumption or that investment somewhere, what has just happened is that because of the way we statistically compute the GDP numbers, it's not being captured. So now it's now being captured. So it's now, like, I think the economy is about 31% in nominal terms bigger than the old data showed, right? And so, yes, it will help in terms of regulatory and legally enforced debt ceilings, because I think we're at 50%, so this brings us down.
Yeah.
But in terms of real economic pulse, right, real economic activity, we suddenly don't have 31% more economic activity in Nigeria, right? And if you invest based on that, you're almost guaranteed to lose money.
Yeah.
Arnold, sectors that lost ground, crude oil, construction, food and beverage, cement, textile, electricity, education, accommodation, and food services. So
Yeah.
does this kind of speak to what? Does
Well,
it speak to what Sam's saying?
for me, it's the sort of I don't want to say exact opposite, but I'm taking an opposite view on that. I know you said it was disappointing and maybe disheartening. For me, it's the rebates actually. Maybe because I'm not as bullish Nigeria as you are, but for me the rebates was exciting. Yeah, it was right. So things that when I look at debt to GDP, for example, and I spoke about this, our debt to GDP shrinks, which makes us more attractive. And I'm looking at it from a capital inflow perspective. I'm looking at the ratios.
GDP doesn't pay debt.
I'm looking at but listen, we have a 2025 Euro bond that's coming off, that's maturing this year in November. We will need to go to the market and look for more debts. For an FDI or even an FPI sitting in a desk in New York, Miami, London, wherever it is, they have a criteria, right, to match. And when they see things like debt to GDP, it excites them because it makes us look better on a rebase to old GDP perspective. So for me, most of our ratios look better because of this rebase. Something that doesn't look so good, and perhaps maybe tax to GDP, because then it gives us revenue mobilization issues. But outside of that, I'm actually quite excited about what this means and how this looks for the potential inflow of capital coming in Q4, Q1 next year.
Interesting. Tunji, what's your take? I mean, you've been in this space before. You've been in this GDP or rebasing conversations sometime in your earlier life. Anything about these numbers that stuck out?
No, I think it's actually very interesting the way Sam captured it in terms of the fact that the economic activity has always existed. You're now just capturing it to make the economy look bigger. It does. I do question some parts. Cement seems to not be as bullish, but then building and construction. Because I don't know how you construct without the cement.
Yeah, but let me ask though, isn't the fact that isn't it because there isn't really any informal cement to capture, right? So what's giving these guys less is because they're capturing more informal from
where?
From some already existing sectors. So cement, there's no informal. So they released a document that shows the formal versus informal and what's been moved. And you can see that cement was always 100% formal, so there was no informal captured. And then some others. So things like agriculture is increased because now you're capturing more informal agriculture.
No, but agriculture has always been number one.
No, but they're capturing more informal agriculture
Number
into
two
the
after
rebase.
services, right?
in terms of major subsectors. So now that we're seeing real estate, so I mean, if you look at our top five largest sectors, you're seeing trade, you're seeing telecoms, you're seeing agriculture, or actually crop production, right? Crop production, telecoms, and even financial services. Doesn't this, in a way, represent what the Nigerian economy is today?
Unfortunately, it does.
Isn't that what it is?
Unfortunately, it does. It does.
So what else are you guys looking for? Like, do you expect manufacturing to all of a sudden be among
how manufacturing is
I don't.
suffering?
It's just grim, right? To see that as an economy, in terms of our structure of our economy, we've gone backwards as a society. I guess we are. Yes, we are.
Yes, we have.
Right? We have, right? Because manufacturing index is lower, agriculture index is high. When you think about the process of development, you really start with largely an agrarian society, and the bulk of your labor and your output comes from agriculture. As a society progresses, what tends to happen is that your agriculture becomes more productive, right? Because the labor intensity shrinks and the proportion that it contributes to the GDP. Like in the US, agriculture is probably less than 5% of GDP or so. But yet, I don't think the US is having chronic food shortages. Yeah. So that's what I expect to see during the evolution. And I think we're on that journey. But this number just showed that our late
it kind of exposed
it brings to reality sentiments that we already kind of feel, right?
Yeah.
And so I wasn't particularly pleased to see that. So that's why I said it was a grim read. It's not these numbers is not something that excites me because it doesn't really make me make an investment decision one way or the other.
Absolutely. Right? I think that's one thing took away from it, because if I were to look at it broadly, there's nothing that jumps out at me to say this is the place to invest in Nigeria. Like, there's no sector that is overtly robust.
You know, this is what I get to face all the time and drink some mics. Like so much naysayers and negativity.
I'm not negative. I'm not negative.
Like, especially on this side of the divide today. Like, this side of the divide is always negative vibes. I do not understand. So are we saying now that you guys don't see the road to, you know, the $1 trillion economy?
How now? How?
Like, where?
By when? 2040, 2050, or 2030?
Maybe not 2030. Maybe like 2040-ish.
I mean, this is simple maths, right? So think about it, right? And an economy grows by roughly 72 divided by the growth rate, right? That's how long it takes an economy to double.
Yeah.
Right. So if we are looking at 272 trillion nominal GDP, you index that into dollars, you are looking at a 220, 230 billion economy, right? Which means the economy needs to grow 5x from here for it to
hit 1 trillion.
Hit 1 trillion. What does that mean? It means that the economy needs to double and double again and then some. So basically, if I do the maths, I think there's probably 5 years now between now and 2025. So I need to basically get to 1 trillion. I basically need to be growing at 22, 23% a year, right? I don't even think China, when it took 600 million people out of poverty, did that. So I think I have no problem with ambition. And to be honest, I was one of the people that when the current president puts that ambition out, I was very happy, because at least that's the government that is aspiring to. I didn't see that with the last administration. So I think it's a fait accompli that they're not going to meet 1 trillion GDP come 2030, but at least let them try. So if we end up at 500 billion or 600 billion, for me, that's success.
All right, so we looked at the numbers, already have an idea of what GDP looks like. So where are the growth areas? Mining, oil, and I think mining used to be the fastest growing sector, as well as financial services. Where do you guys think the money is going to now? Looking at the kind of government that we have today. Guess what? The fastest growing economy, fastest growing subsector at the moment, railways. So should we be investing in railway?
Well, I don't have.
Wait.
I guess that's
the fastest growing subsector.
By the way, it's good that a lot of the people we have in the house are market people. Fastest growing could be anything.
No, that's like officially GDP numbers. Fastest growing subsector.
From 1 to 2, you've grown 100%. So you are faster than the person that grew from 300 to 315. But the size of growth for that 300 to 315 is actually bigger.
A standard base effect. See, I think Nigeria is open for business, right? There's almost no sector that I look at that I don't find opportunities in, and that's a fact. The transportation sector, by virtue of the removal of the PMS subsidy, has basically just opened up, right? To put things in context, there's a reason why, like, as crazy as it sounds, we still have medieval transport system where we are basically doing interstate transport using Toyota Hiace buses, right? The simple reason is very simple. It's because the PMS system basically created some sort of warped incentive that made it economically more efficient to transport people using 14-seater buses as opposed to using rails or using the large luxurious buses. Exactly. So by removal of fuel subsidy, I think transporters will have to look at their maths and run their numbers, because what has just basically happened is that their cost per kilometer has gone up. So you need to densify your travel in order for you to make decent economic return. So I actually think, if I want to predict on the road transport side, that we're going to see I think the large luxurious buses come back, because you need to ensure that you're generating the right kind of revenue per travel to match your cost per travel.
You know what's actually interesting? The fastest growing sector is actually rail transport and pipelines. What does that say?
But on the rail transport side, I think it's because there's nothing, right?
So it's a low base.
It doesn't matter, but the fact that it's the fastest growing, and it's something that we didn't have a decade ago. We didn't have this sort of rail transport now, and it's fastest growing, and it's still government driven. Isn't that an opportunity for businesses?
To do what?
Invest now. So rail doesn't make money. Like nobody, right?
That's what I'm saying.
So rail doesn't make money.
So in countries where you have rail, is it 100% owned by the government?
Well, it depends, right? Yeah. But the initial stage of building your rail network, it's largely been done by the state, right? You benefit from rail because of the externalities that it gives you.
Like transportation
so
for people. So
Okay.
those are secondary things to it.
Yeah. But I think obviously the government should focus on rail. I actually think the government should focus more on cargo than it should on passenger. I don't really think you're going to get this level
because rail really is cargo, right? So the passenger side is just the extra.
It's the cargo. So it's the improvement in the friction. All right, in the improvement in the friction of logistics, right? That's what rail helps you solve.
But so, rail also has the multiplier effect that I've always said that, you know, one of the things that could decongest a place like Lagos is if you can
underground
wake up in
subway
Ado-Ekiti at 5, get to this train station by 6:30, and get to Victoria Island by 7:45. It would really decongest Lagos because it's cheaper to live there. Cost of housing, cost of living basically is cheaper in those areas. And it will also spread economic activity across the nation and then boost those areas and multiply effect for GDP. So I think rail will work, but rail on itself, what do you invest in? So they will lay the rail, then we will now build around it, but let them lay it first.
All right, by the way, guys, inflation numbers were also out last week. Seems like inflation is trending downwards. We've seen GDP numbers out now. There's always been this talk around, perhaps maybe we're in some kind of stagflation. Any silver lining in some of those things? I know we're not growing at 7% or 6%, which I think we all need to be at. But we've been growing now every quarter since the second quarter of 2020, basically, right? So we've not experienced any dip in growth at all. So we've been growing steadily, and inflation numbers seems to be trending downwards as well. So, what does this mean?
MPC needs to cut rates.
MPC just met today, and
they didn't. They kept
and they kept rates steady.
They need to cut rates.
Why do they need to cut rates?
I disagree.
Let's hear you. Why should they cut rates?
So what exactly is keeping the rates high?
Inflation is still high.
Inflation is still high.
It's trending downwards.
It's trending down, but it's still high now.
Based on your MBS friends data.
It's still
your
high.
MBS family data.
High.
But the inflation out there is still high.
Did you look at June inflation numbers?
The food inflation went up.
June inflation numbers did not show. I think there's a lot of statistical noise as a result of the change in the series, right, that happened in January. But I am surprised that I'm not seeing a high level of disinflation in the economy given the base effect. Okay. If you look at June numbers, yes, you had a reduction in headline inflation. Yeah. But if you look at core inflation, it went up.
Went up.
You look at food inflation, it went up. Month-on-month inflation, it went up.
Yeah. Okay, so this is the point. Historically, around this time, food inflation rises. It will start trending downwards, especially in July, August, September, because historically, that's also harvest period. One of the reasons why food inflation tends to yo-yo is because we do not have a lot of storage. Yes, it's the season.
Yeah. So it's planting season, it's raining season. So the process of evacuating products from rural area where these things are made to urban markets,
historical.
The cost effect is high.
Yeah.
So there is a bit of there's a bit of seasonality that exists in the data. But even when you strip out energy and you strip out food, core inflation is still rising. Right. So I do think at some point in 2026, we will be in a proper disinflationary cycle. The risk is cutting too soon. And frankly, I think it was...
What's the risk of cutting too soon?
The risk of cutting too soon is that you threaten your exchange rate. You're threatening your inflation mandate by putting pressure on the exchange rate. See what is happening in the market at the moment. The market has cut interest rates for the government, right? Because you have NTB that is now trading at 16.5% when your MPC rate is at 27.5, and your SDF and SLF is way. So the market has, because of the wall of liquidity that has come in, because if you look at basically in the first half of this year, the DMO only rolled over roughly approximately how much it matured in coupons, in maturities and coupons. So the net issuance, when you strip out the dollar-based Eurobond, was about 700 or so billion, or between 600 and 700 billion. That was the net issuance. And this year we have an estimated projected deficit of 13 trillion. So you add the Eurobond to that, we've basically net issued 2.8 to 3 trillion in the first half of this year. And I think given where oil price is, given where oil projection of volumes is, because we're supposed to exit the year at 2 million barrels.
We're not getting
We
there.
should be looking at what, a 16, 17, 18 trillion of deficit. But for some reason, the DMO has been stalling in its issuance program. And what has happened is that the CBN is not stepping up. I mean, they're issuing a lot of OMOs to foreign investors, but local investors cannot participate in that OMO market. So that wall of liquidity is hitting asset managers, is hitting pension funds, and needing assets and pockets to deploy that cash into.
Yeah.
So what has happened is that you have a bifurcation of your short-term interest rate market, right? Which breaks the monetary transmission mechanism. Because you have MPC at 27.5, you have OMO that is currently around 23% discount, and then you have NTB at 16, 17%. This is basically back to Murphy era monetary environment where conversations around monetary policy meeting become performative. So they need to do something to fix that problem quickly and relink the entire short-term interest rate market, because it's only a matter of time. The pressure will start to build on the exchange
Yeah, but
rate.
how long do you think it
So
takes?
wait, so that sounds
How long do they
counterintuitive.
have to keep? Sorry, how long do you think they have to keep? I mean, I agree with you definitely. The market is already priced in. The market has cuts.
As cut rates are like 300 basis
the central bank
points,
doesn't
right?
need to. But how long will they? Do you think they need to?
I think the
keep
central
it up
bank needs to
27?
tighten. The central bank needs to do the opposite of what the market has done, right? The central- tighten
Or keep?
market rates, right? So obviously it's signal
But they're using
policy.
OMO. They're using OMO for that, right?
Yeah, but the problem
sense,
is
'cause OMO is still 27%,
the problem
so
is
you-
only the banks and foreign investors can access OMO. So obviously the banks spreads are widening, which is why fixed deposit rates have been declining, right? But you now have your market interest rates, right? The reason why you have your MPC and your asymmetric corridor is to signal to the market where your short-term interest rate, your market rate should be. So that disconnect needs to be fixed. I think one of the ways to fix it is to allow local asset managers and pension funds to buy OMO, right? The knock-on
100%.
the knock-on effect of that,
Exactly.
the knock-on effect of that is that it balloons the balance sheet of the CBN.
Yes, and then there's a lot more interest payments to make.
Yeah,
as well.
but the CBN
Where are they gonna
mandate
find the
is
money
not
from?
profit. The CBN mandate is price stability. Price stability is being threatened. Nobody has told the CBN that you need to book surplus
So
every
Sam,
year.
there's something we don't. I don't know why we sort of scared around sometimes. And the question is, how come we've had monetary policy tightening since September last year? In fact, we're going to have it for a year now because the next MPC meeting is in September. So we've had 27.5% since September. We've had this very tight CRR and liquidity ratio levels for a long time now. Yet we're still seeing money supply at over 100 trillion. In fact, climbing.
Yeah, but the
So
rate of
what exactly is working and what is not working? Why do we have so much money out there?
I mean, I'll just say two things. The rate of growth of money supply is declining. Assets. I mean, we went from 80% growth in money supply to around 20% growth in money supply. And 20% growth in a nominal GDP environment of inflation is at 22%. So add 3% GDP to that. That is a tightening. That is not a shrinking, right? When you think about it from that perspective. So in terms of, okay, what is creating this wall of liquidity? I have spoken before that at the heart of our persistent exchange rate crisis is how Nigeria chooses to recycle its petrodollars, right? So what happens, right, when dollars flow into the Federation account is that the CBN basically monetizes it by creating extra naira. That naira hits the banking system. And that is extra liquidity that needs to flow into assets. And you then have, because obviously FAC has been doing very well. Both state and federal finances has been improving as a result of exchange rates, right? So that wall of liquidity that is hitting the markets every month that there's a disbursement of FAC, there's new liquidity being created. So even though your banking system liquidity is getting tighter and tighter, you are creating more and more liquidity. And then in the process of also issuing a lot of these NTB and bonds and OMO that you've issued, I mean, if you look at the data, over the next 6 months, there's about 17 trillion of maturities coupon that needs to be rolled over. And if DMO continues to do its posturing and is not issuing a lot more, that liquidity needs to find a home. That is what is creating this money supply growth that you're talking about. Having said that, the CBN has done a good job in reducing the rate of growth in money supply. But the idea that money supply needs to revert what Murphy created, that's why
You think that's not possible anymore?
that's one of the reasons why I think that high level of CRR is going to be there
for as long as we probably live. I think that liquidity has been created. It just needs to be permanently sterilized.
So Arnold, where does this leave manufacturers or people who actually drive real economic growth, right?
So
because you can't drive the sort of economic growth that we're
With
looking
this kind
for
of interest rates.
with interest rates at over 30%. It's just impossible. So where does that money come from?
So I think that's one of the reasons why that industry is struggling, right? And you go back to the GDP and agriculture is doing so well and manufacturing isn't. Because naturally these guys need liquidity or they need debts, right? So in my mind, it's going to be somehow left to private debt to actually take. But the problem is with interest rates so high, private debt investors would have to look at other metrics to actually price these loans or this debt that they give, right? So you go to Treasury. So when you're actually looking at a private debt or what you can return, you have to now look at what Treasury bills are offering and then try to price it based on that. Because if interest rates stay at 27.5%, cost of capital stays high, and then these guys will continue to get squeezed out until they die out.
So how come you're seeing private businesses or huge big conglomerates going to the debt market and then they are borrowing at sub 20%? Well, maybe not all of them. You're seeing some at 20, 21%. But basically, I haven't seen anyone borrowing higher than, MPR. Maybe one or two, except maybe the ones that have very low risk. But for some of the blue chips, you've not seen anyone borrowing at premium to MPR. So who are the banks now lending money to?
but who are the banks? But the banks are not lending money now.
There's no.
So what business are the banks doing then?
I don't know, but
The banks are bond hedge funds.
even today, I was going to.
Because why lend to a business when you can lend to the government?
They are bond hedge funds. Fixed income hedge funds. That's what they are now.
Bankers in the house. Sorry.
We apologize. But I was going to say today that there's a deposit drive in a few banks. I just noticed it. There's a drive for fresh capital.
Yeah, but that's only for CRR purposes.
But
I don't even know what.
Because you know that whatever deposit you get, 50% goes to the central bank. These guys aren't lending to anyone.
No, what he's saying is that a lot of bank account officers, I don't even notice it.
They are really
They've been
aggressive
on the phone lately. Like,
Because if you look at the data, there's over 1 trillion in SLF. So the banks are basically borrowing money at, what is their symmetric rate? 27.5 plus. Is it
plus 5? Isn't it
at 32%?
Yeah.
So banks, in order for them to meet their obligation, the banks are borrowing money at 32%.
Yeah.
So if you can do a commercial paper or you can get a fixed deposit at 20%, it still makes sense for you to do that business.
Yeah.
So there's tight liquidity, which is why this thing is a bit of a paradox, because there's a tight liquidity in the banking system.
Huge one.
But then in the global system, there's a lot of liquidity.
Yeah.
And what is happening is that liquidity is sitting in pockets. So because when we look at system liquidity, we are looking at the system in aggregate.
Yeah.
But when you look at that liquidity, it's concentrated in a few banks. GT Bank is liquid. Zenith Bank is liquid. But then, maybe I don't want to mention names, but there's some of the other ones that are not very liquid. And those guys are basically going to the SLF to borrow at 32% when you can issue a commercial paper. So they will do that. Arnold, so your question around manufacturing, right? I think we will go into a disinflationary cycle just by simple base effect. And also when you look at exchange rate is strengthening. Right? So the exchange rate pass through to commodity prices because food is a commodity at the end of the day. So if you are, and because we are a deficit nation in a lot of food that we consume, the impact of the exchange rate on the food basket is usually underestimated. It's huge, which is why you had huge food inflation when the exchange rate was galloping. Right? So look at the data first, right? The food exchange rate is strong, right? Because of Dangote, who needs to continue to push out his PMS to the market because he doesn't want to hit tank top. He's putting downward pressure on PMS prices. This is positive to inflation. You have relatively high base effect. We are going into a plentiful harvest season because we've just gone through the rainy season. So going into the back end of this year and in 2026, we will see disinflation. When you see disinflation, and then add to that, corporate profit is recovering. So I actually think manufacturing sector would improve. The cost of credit would improve, but we shouldn't be too premature to be cutting so quickly and then creating a problem that got us here in the first place.
You're saying regardless of this tight policy or this tight environment that we're in or period that we're in, you're still seeing improvements in manufacturing? regardless.
I think look at
from the results that we're seeing though, yeah.
Look at the NGX, strip out the banks, NGX 30, non-financial, right? We are at the highest level of quarterly profits over the last 2 years.
Yeah.
But isn't that down to the fact that you were talking about liquidity finding a home?
No, I'm not talking about price performance. I'm talking about actual profitability. That has nothing to do with liquidity.
But that's also driven by price increases. But let's sort of segue into something else that is related as well. The CBN governor at the MPC briefing said external reserves was now at $40.1 billion. And then and he also said gross. I don't know why you people are just bothered about net. Gross, $40.1 billion. And then he also said that this was also because we've seen increase in crude oil receipts. We've now hit our crude oil OPEC targets. We've met it now, 1.5, meeting it comfortably. And I think he also said, looks like the petrodollars is actually coming in. We're also seeing less demand for dollars. According to him, in fact, he gave a story. He said he was speaking to some travel agent who told him that, he was speaking to a friend who told him that the travel agent who he typically pays in dollars to buy ticket. I'd like to know who that travel agent is, by the way. Pays in dollars to buy ticket. Said, look, I don't want dollars. Give me naira. I'm fine taking naira. So where's
he traveling to? Calabar?
That's right. So there's a lot of reduction in demand for dollars. So, but you can see that is reflecting in the exchange rate as well.
And you can see it in the data.
Yeah, so we're seeing 1.535.
But let me ask you, how much? Do you know how much of the oil receipts or how much of the FX revenue, FX reserve is oil? I know back in the day, like 2010, it was like 70-80% average.
Still FX,
was about 30%.
How much of FX exports? How much of our exports is oil linked, right?
Yes. FX reserves. FX reserves is not all exports. But by the way, balance of payment is positive as well, right? Has been positive for some time now. It's positive. Okay. That's probably what you want to look at. But in terms of reserve is made up of a whole lot of stuff.
Yeah.
But the point is, you have robust reserves at $40.1 billion. You have us meeting crude oil benchmarks. You have crude oil prices now at above $70 per barrel. Why are you guys still betting against the naira?
Who is betting?
Who is betting against the naira?
So what do you think?
Have you sold on your dollar holder?
No, of course. Why will I sell?
Let me ask you. 1.525.
You can't long term.
Do you think it's strengthening from here?
Dollar?
I think the naira has a strengthening bias unless it is hit by significant global factors, right? I think we need to put in context of how much dollar demand has shrunk. Pre-COVID, CBN used to spend about $2.1 billion roughly monthly in terms of intervention. Mm-hmm. Post-COVID, that number was about 1.4. If you look at the data over the last 6 months, CBN has spent on average about 700 million a month intervening in the market, right? And when you look at that intervention relative to when you look at it relative to the cumulative outflow, it's only in April that CBN rose to like 40% of the market. As at June, with the last data that I saw, CBN is around less than 10%, around 10% of the market.
But there's context to that, though. It's like standing outside naked and complaining about being cold. At that particular time, CBN was intervening. CBN had to intervene.
No, I'm not disputing that. The point I'm trying to make is dollar demand is low. Yeah. Right? CBN, by the way Nigeria is structured, CBN would always be a market participant because it's a de facto aggregator of dollar revenue that comes from oil.
Yeah.
Right? But what CBN participation tells you is the level of autonomous dollar flow that is coming from other sources. Right? Okay. The point I'm trying to make is that the level of autonomous flow is so high that even in June, CBN didn't need to intervene in the market and the currency strengthened. So when you guys are talking about pessimism of the exchange rate, I'm always surprised as to what is going to make the exchange rate crap out. What exactly? Nobody has been able to give me a convincing argument on where the pressure of the exchange rate is going to come from.
You want to give him a convincing argument?
I'll just say one thing. He talks about but he talks about April. CBN intervening in April. Can you remember what the world looked like in April?
Yeah, I mean the world came to
exactly,
halt, right?
And they had to intervene.
Yes.
Right. So
I don't want to use the word intervention. It participated when there were frictions in the market that it needed to facilitate.
And global friction, right?
And
this global friction hasn't necessarily ended. It's just
it's ended. That's why it's called tackle. It's tackle. Everybody understands Trump does threaten.
Even if you think about it, even the reciprocal tariffs haven't even started, haven't even kicked in. We haven't even talked about the effects on AGOA, on tariffs, and how it affects African countries.
Anyways, so.
Yeah, but it affects African countries.
But you know what's very funny, man?
You want to be pessimistic, so you're just dragging
on
the
I'm
negative
talking about
data.
real facts.
See,
I'm talking about real facts.
So I was very bearish on the US, as you know, right? And what drove my pessimism was twofold. Was obviously the policy uncertainty as a result of tariff, but also was the seemingly posturing that they wanted to significantly reduce fiscal deficits in the US, right? But
and they can't.
It's out of the window now.
Yeah.
So we've gone from, because I strongly believe, right, that the US outperformance globally is a function of its ability to run unsustained fiscal deficits. So the US is running a fiscal dominant economic system, very similar to what Buhari and Murphy used to run. Just to put this in context, right? Right? It's very scary when you think about it. But in the short run, just for example, when Godwin turned on the taps, right? And we had runaway fiscal deficits. We had current account deficits, right? The initial period after that tend to be boom. It tends to be a boom. And we saw that, right? Remember, yields in Nigeria went to like 1%, right? I think in a global way, what the guys in the US are doing are recreating some version of that. But because by passing the big, beautiful bill, right, we are adding a few points to fiscal deficit that is already quite high. And then, so you're looking at fiscal deficit, twin deficit, so fiscal and current account deficit, that is around 12% of GDP.
US GDP, that is.
Yeah, US GDP. The economies that I used to see those kind of numbers were the basket case I covered when I was an emerging market trader. All right, so you're talking about Turkey. You're talking about, and yes, there is the exorbitant privilege of being the reserve currency. Yeah. But I don't know how long the US can run such a system for. The market may give them the benefit. I think the market will boom. The point I'm trying to make is we have shifted in the US from talking about fiscal contraction to fiscal expansion, which is going to, in my mind, drive both growth and dollar weakness. In that context...
So you're saying in the past 6 months we've shifted?
Yes. In the last 2 months we have.
I don't know. So for the Nigerian story, the simple thing is, part of the things that are creating the stability that we are seeing around exchange rate market, like you said, the inflow, net inflow is pretty decent, right? And they are based on a few factors. Policies seem to be working. It looks like we're headed in the right direction, but all those things are not entirely in our control. So we still need a lot of third parties. Now, until at least 20 to 30% of these factors become in our control, I will not be as bullish on the Naira as most people will be.
It's about sequencing at the end of the day. Okay,
look at one has to happen before the other.
So look at FPI.
So when the next one happens, I will start.
But by the market don't run now. Everything is gone. So look at FPI flows. In the first half of this year, right? I think from the data that we looked at, about $8 billion of FPI came into the country. Yeah. Right? That is very close. I think it was about 8.6 billion in 2024. Mm-hmm. So we are close to like 95% of total FPI flow in 2024 and 2025 and only halfway through the year. Yeah. If you annualize that number, right, that will get to like 16 billion plus. That is going to be the largest FPI inflows that we've received since we started gathering data. That's the amount of dollars that is coming into the system, right? The question is obviously a lot of those dollars. Again, you need to achieve exchange rate stability. You need to achieve macro stability. Mm-hmm. You need to grow domestic dollar originating capacity, right? If you look at recounts, they've gone up by almost 50%. Recounts in the Niger data have gone from like 34 active recounts from like 34 to 50 as at the last data that I checked. Oil production on June data has gone up. Right, we're now looking at 1.7 for crude and condensate, and for crude alone is at 1.5. So we are ticking higher. Yes, we need a bit of investment. A lot of these assets that basically the IOCs transformed from equity holders to debt holders in, right? Those assets, in order for the new equity owners to make money, they need to drill. Yeah. They need to get that production. So, and then obviously the backlog, which is the arrears that the government owes NNPC, needs to be cleared. Right? As at the last time I checked, there was about 1.5 trillion of outstanding arrears that the government owes NNPC, which is why NNPC has not been remitting as much USD to FAC. Declare that number, the transmission mechanism kicks in, you get dollar revenue, and then at that point you have exchange rate stability. You can start to cut rate and let the FPI start to go. No problem.
All right, guys. So let's try and make
So
this
to
simple.
be honest, all these things sound, if all things go according to plan.
There's a lot of ifs.
Of course,
And
there is
Nigeria
always
is-
an assumption.
So I've been
and
there.
so
to be,
far,
it has
you
to
guys
be.
have been wrong
I say,
on
I
all
look
assumptions.
at balance of probabilities, right? Of course, there is a part where Naira craps out. Oil price, for some reason, declines, right? There is a significant dollar strength that leads to repatriation of capital, right? Or we have a huge issue in the Niger Delta and people start to draw pipeline.
right now, it's
Again,
not going
one
that
point I wanted to
direction.
make, if you look at the NUPRC data, for the first time in Nigeria, we have 100% of our pipelines available for evacuation.
Yes.
That's that. I mean,
What
guys,
was
look
that?
at this
What
stuff.
was- Yes.
Yes. And you know one thing you guys are not saying. You know one thing you're also not. You know, this Tunji's laughter just annoys the shit out of me.
You guys should tell me why you are pessimistic.
You know what you guys are
because
not
I
actually
don't-
saying, right? We've gone through what was that thing Trump called it again? That is so-called day.
Liberation.
We've gone through Liberation Day. We've gone through Israel, Iran, low oil prices.
Yeah.
We've seen several
We've
headwinds.
gone through
and
Rivers crisis.
Rivers crisis. The talking point out there is that we might be in a situation where Nigeria is somehow getting decoupled from the oil story. So we really don't need oil prices to be that low or astronomically high for us to keep
Yeah, I think I
the
might
exchange
actually
rate
agree with
stable,
you. I might
because
actually agree with
now
you on that one.
it
I might
looks
actually agree
like
with you.
that this devaluation that we've seen, as bad as it sounds, right, has basically disciplined people. So you've got a lot of Nigerians now saying, you know what am I holding dollars for? Like, where is that 1.6 that I'm going to use to buy dollars? Because what you've seen happen is that there's some indirect kind of financial repression because people are now poorer. So you don't have a lot of
have to
money.
adjust.
Yeah, so the demand that you tend to see in Murphy days, because you had that, disparity between the official rate and the black market rate, don't exist anymore. So what is that thing that is going to get the exchange rate to depreciate worse than we're seeing now? I don't see it. I don't. But anyway, I like when you guys are quiet because it means you don't have an answer. So we can just move on.
Tired.
No, for me, the day Arnold becomes
I know it sounds
the day Arnold becomes bullish on the exchange rate, that's the day I'm selling my Naira.
Yeah, see, I've always said. I don't like the currency, I like the assets.
So anything
But
you
the thing
guys
is,
are,
it's not
are
that
watching
I'm-
Drinks and Mics and you just hear Arnold just all going
I love Naira.
about
It's time to
Naira.
sell.
Just sell, man, because Arnold is probably shorting that stuff. But anyway, let's move on to other stuff. I just wanted us to talk about investment outlooks as well. It's been a great year all around, and I want you guys to make sense of what's going on, man. Crypto 111K. On this show, Tunji here was ranting and upset that crypto did not drop, Bitcoin, I beg your pardon, did not drop to like 70K so that you can buy. And then we're here, it went from 70 all the way to 117. Sam, we've been here as well. We analyzed equities. Remember when
It's 119
GT was
right
at
now.
50 bucks or
I got
something.
that 32.
And all that.
32.
GT hit 100, Stanbic hit 100. We're seeing stocks flying. And then bonds as well. You're also seeing bond yields go up for those who are bond hawks. You're also seeing gold prices, Arnold Silverite asset, also hitting all-time highs. What's driving all these asset prices? Why are we seeing
Donald
so
Trump.
many things go up? Not just in America, globally. We're seeing, even in Nigeria, like there was a report that we put out yesterday. We had not seen this sort of return on the stock market in any presidential year ever. Like from 1999 to date, we've not seen the stock market soar this much, over 130% since the current president came in. So what's going on? And then yet, you're still seeing a lot of poverty in the streets. People don't have money. People are poor. Prices are going up. So what exactly is driving all
Asset
this
prices, houses are getting very expensive. You're
So
hearing
I mean, like, Arnold, maybe you want to take a stab at this.
Okay, I mean, first of all, Bitcoin, for me, I'll speak from my perspective. I've seen Bitcoin sort of go from a speculator's assets, just buy here and there, to something that's taken more seriously, right? So last year, the US allowed Bitcoin ETF, so crypto in general. So last year, the US allowed Bitcoin ETFs, right? So BlackRock got involved in the Bitcoin ETF, Fidelity, and a few other huge asset managers. Then fast forward to a year later, JP Morgan saying, listen, we'll take this Bitcoin ETF as collateral. Now you can actually use your Bitcoin ETF as collateral to get a loan. JP Morgan is also saying they're considering allowing cryptocurrencies themselves to be collateral as well in 6 months. You see Morgan Stanley.
You've seen the crypto bill passed, the Genius bill passed.
So it's I think what's helping to fuel the Bitcoin rally is this change in the perception from an institutional level on crypto and Bitcoin. So that's the change you're seeing. The gold trade is a gold trade. We've talked about the structural change that kicked in 2022 when Russia and Ukraine started, and we saw the US sanction Russian assets. Global central banks were saying, what's going on? We need to figure ourselves out. We need to diversify away from US treasuries. So you started seeing this almost triple, let's say double the amount of gold central banks were buying annually. So that's the gold trade. And then for me, the African assets, because it's not just Nigeria seeing this rally. Samson has this wonderful presentation that he does for his fund. And it really just sits well with me where you go back to EM crises, right? Then the Asian crisis in the 90s that seeped through Russia and South America. And when you have this huge crisis where you see currencies, these assets burst, this bubble bursts, right? So currencies crash, equity prices crash, everything crashes, FDI, Western companies, Western businesses leave these economies. And, fast forward to 18 months, 24 months later, these asset prices just rally. And we've seen it. We're seeing it happen in Africa. Morocco rallied. Ghana did a madness. Ghana did an absolute madness from Eurobond to equity prices. Kenya did a madness. Rwanda, anything with a stock exchange.
That's my question. Where is all this money coming from?
So it's just it's a cycling of it's a cycle, right?
So can
you
I
have this?
Sorry.
No, it's fine.
So there is a global factor and there's a local factor, right? I think what we've had since basically the global financial crisis, and it got accelerated post-COVID, is the US is basically acting as a sort of hoover of capital from the rest of the world. I'm sure if I ask this audience, they own US equities, they own US stock. The net international investment position, which is basically the amount of US asset that is owned by foreigners, is over 90% of US GDP, right? So what has happened in the last decade plus is that the US has attracted a lot of capital. Now enter Donald Trump, right? And then enter Donald Trump and the policy uncertainty and the need to want to fix their debt problem by inflating it away. Then suddenly, right, these holders of US assets are now asking questions around the long-term viability of their exposure. And remember, a lot of people did not hedge their dollar exposure while buying US assets. They left it naked.
It was the hedge.
Because the dollar itself was the hedge.
Yeah.
So what is happening right now is that there is either capital flowing out of the US, but even the guys that are not taking capital out of the US, right? They are looking at increasing their hedge ratio, which is why you continue to say maybe July was a bit of an anomaly but the dollar has continued to systematically weaken since Trump came into power. Yeah. So what does that do? That basically drives capital out of the US into the rest of the world. And what is the rest of the world doing? Fiscal impulse in Europe is high because of the need to basically re-engineer its defense infrastructure and its infrastructure in general, right? China's credit impulse is improving, right? So I think what you are seeing is that the global investors are realizing that the US is not the only game in town anymore, and there are other possible interesting games.
Yeah.
So that's the global environment. In Nigeria, for me, it's a very simple reduction in your implied cost of equity brought about by macroeconomic stabilization.
Wait, could you recap that? Reduction in your implied
Cost of equity.
Whose cost of equity?
The market implied local investors' cost of equity. Because think about it.
Was it reduced?
Yes. Asset pricing, I'll use a bank, GT Bank as an example. GT Bank, right, while it was generating 30% return on equity, was trading at a 50% discount to its book value, right? You basically, if I simplify the maths a little bit and do ROE over cost of equity and I solve backwards, that is telling me that the market was saying that the risk factor it is applying to $1 of earnings from GTB is 60%. That's unsustainable. It had to unwind at some point, right? So what we are now saying is that the market is not like, you know what, GT is not as risky anymore. Let me apply 20%. You do that in your model, your price explodes.
That's simplistic.
It is. It is. But it sounds simplistic, but you look at, so what I do, some of the work that we do in the office is that we reverse engineer market prices to give us the other variables that fits into your model, right? To get a sense of, okay, how badly discounted are Nigerian assets? We don't appreciate that despite the rally that we have seen, Nigeria is still trading at least one standard deviation cheaper relative to its peers.
That's fact.
Right. And so that low PE multiple, right, is basically your PE, right, is basically a capitalization of your earnings. So it's a DCF in a way, so to speak. Right. Low PE is a reflection of high weighted average cost of capital. Because Naira is stable, right? And people are now saying, you know what, the Naira value of earnings that is coming out of this economy, the risk of a devaluation of that Naira is smaller. As a result, the weighting I place on that Naira, the risk weighting, the probability of the devaluation of that Naira is no longer there. So in a way, it's just a reduction in your cost of equity that is driving valuation.
So where's all that money coming from? So where's the capital coming from?
No, it's coming from.
Because it's not global. Because we're not seeing.
No,
I
it's
mean,
part of it is global.
they're still very. It's mostly local. It's like 80% local. So
guys, let's put. I mean, look,
we're not seeing that FPI inflow.
We haven't seen a wall of FPI liquidity.
So it's local.
But what you are seeing is also reallocation of capital into equity assets.
So even the local side would have probably exited into the US, but now it's like, do I really want to take it there? Can I look for an asset here? So it's really that reallocation of capital.
I'll put this in context. I launched an equity fund in September 2024, right? And when I look at, SEC sends us this data weekly, which basically breaks down the total mutual fund industry in Nigeria. The total value of mutual fund assets is roughly 4 trillion, just shy of 4 trillion. The total value of equity assets, so when I add equity funds and balance funds together, is about 120 billion. It's a joke. I launched a fund in September. Today, I'm probably the third or the second largest equity mutual fund in Nigeria with 5.5 billion AUM of assets. That's a pittance when you think about it. So just reallocate 5%.
Your face is like, the heck?
Go on. So just reallocate 5% of value from money market funds into equity fund. And remember, returns is the biggest predictor to future outflows. Equity over the last 2 years has consistently outperformed fixed income and consistently outperformed money market. It has actually outperformed the most important asset for Nigerian investors, dollars.
It has. But one thing I would say though is to show you how much local money is going into investments, because you talked about the growth in AUM. It's gone from 250 billion to about 5 trillion today over 10 years. And it's increased almost
Naira-wise, is that Naira?
Naira-wise. But it's also increased, this is AUM in the asset management industry. It's also increased of almost by 1 trillion Naira in a quarter. It shows you how much liquidity is local and is going into investment.
So I'll give you an example of mine. So around this time of year, what I generally tend to do is cycle out all investments and put it in dollars, right? So historically, that's what I do. This year, we cycled out. I'm like, wait, this dollars is not dollaring, you know, because it's almost like I lose, because if I look at, if I put it into I don't know, treasury bills or something, the returns is looking higher because every spread across, and I know there are some people in the house here, your returns on your dollar market fund is sub 10%.
But so I mean, we haven't published July numbers. As at end of June, the fund was up 73% in 9 months. I think it's
net asset value or
no,
return?
in terms of return, in terms of performance.
For the dollar fund or naira fund?
For the naira fund,
Naira
equity
fund.
I was
fund.
talking about
Yeah,
dollar.
yeah, he was
And
talking about
over that period, when I launched the fund, the naira was at 1,600 roughly. Today, naira is at 1525. So my investors, if you're a dollar-based investor, you're probably gotten a 5% pickup on the exchange rate, and I've delivered to you, right, 73% return over that period. And I think July has even been crazier.
So you can see
right?
where the money is flowing
So
to.
so it makes and it's not just me. You look at the broader market, we're outperforming, but if you look at the broader market has also been very, very strong.
Yeah.
So what you are seeing is people just reallocating capital to where they think that they can get the most
best
returns.
returns. Yeah.
And today, that is the
Dollar
equity
is just
market.
not it. Dollar is just not it.
All right, guys. So let's just also inform the house that we would entertain questions as well. So if there are 1 or 2 questions
contributions,
at some point, let us know. There's a window for that. And then we go into a buy, sell, or hold, and then we end this first session of the show. So still on investments, wanted to ask you, Arnold. Then I'll get to Tunji as well, because I know that for Sam's favorite investment this year has been equities, and he's been big on Nigerian equities. As a matter of fact, Arnold, you've been big on gold. So what's your gold story so far this year? Before I get to Tunji,
Gold has been good, man. So I've been buying. We've been buying gold, but not only gold, right? So we've been looking at precious metals as a whole, because there was a point where, and it sort of feels like the gold has really rallied, right? And it's feeling a bit toppy, right? And gold has several demand legs. There's a jewelry demand, there's central bank demand, there's ETF demand, right? On the ETF side, more investors are going in. On the central bank side, I still continue to see, and we've been seeing a nice steady buy. But on jewelry side, gold has become a bit expensive, right? So what it's meant is, if you look at gold, go to GDP to see how the world can afford gold, or go to other assets. So go to oil, go to silver, go to platinum. Gold is really expensive. I'll just give an example. When I started trading gold, maybe 15 years ago, platinum was about $200 to $300 more expensive than gold. But today, or in April, gold was 3 times more expensive than platinum. It shows you how much gold has rallied over the past 10, 15 years. So for us, that felt like, okay, gold is really toppy now. But still, like in the precious metals story, we sort of had to look for an alternative to gold, but still the precious metals side. A lot of it is because the jewelry demand side of it got expensive. An example of jewelry demand is probably like an Indian wedding season. Right, so you're seeing this diversification.
Indian wedding season?
Indian wedding season is
so gold prices go up when is Indian? When is Indian wedding season?
So it's generally between October and April at a strong time. So right now, coming out of Indian wedding season, gold is too expensive on the jewelry side. But there's an alternative to gold, which is the silver and platinum. So what I've seen, and I would say this year, platinum has actually outperformed gold. Platinum is up maybe 40% this year when gold is up about 20%. Platinum has become almost a leverage play on gold, where gold went up $100 in April, platinum went up $400 in April. I'm not saying that platinum goes back to being $200, $300 higher than gold, but it's gone from gold has gone from 3 times to about 2 times. That's how much platinum has rallied and gold is sort of topped. So my gold story still holds, but it's more on other asset classes. So platinum, silver is also one that's been interesting for platinum. So still on the gold side, sort of holding on. I think when the wedding season starts again around October, I think you're probably going to see a nice boost in gold. But it doesn't take away the fact that gold still feels toppy on the jewelry side. But ETF demand is still there. And central bank demand is still there. All
right, Tunji Crypto. By the way, if you want to ask any question, just raise your hands. Someone's going to come to you with a mic. Toye will give away you guys the mic in case anybody wants to ask a question. Tunji, crypto. You've been big on crypto all year round. So
yeah. I'm still.
What's your crypto story?
I'm still big on crypto, even though I think.
Which crypto, by the way?
Ethereum.
So Ethereum is there's a new story around Ethereum, and it's really beginning to get bullish. However, I think the entire crypto story still has about a 30% rise, after which I don't know, all bets are off. I wish I got in earlier, late believer, but there's still I still believe there's about a 30% rise, although pretty much similar to the gold story Arnold just spoke about. So there is Bitcoin, Ethereum, and then when you start to go down, you start to see things like XRP and the rest. There's still some, assets that are relatively good value in terms of.
Is there still an upside for crypto? Is there still an upside for Bitcoin, Ethereum, XRP?
So I think what is now happening is a segmentation of them. So all of them are finding houses in terms of use case. A lot of what you call these things, money transfer companies are now beginning to look in that area. Although there is conversations around gas prices and fees and all of that, but it does look a more efficient methodology. Also just the fact that the bill in the US is it passed? Has it been passed?
It's signed already. Trump signed it to law.
The bill in the US, the fact that, the big banks are now using it as collateral, they are beginning to recognize it. There is an upside. However, the flip side to it is this. Because all those bodies are recognizing it, the volatility starts to disappear.
Yeah.
So that thing that moved crypto from $20 to $70,000 is now beginning to be replaced.
Yeah, that tends to happen when a market matures.
Exactly. Yeah. So, and I think it's now nearing maturity.
Are we in crypto maturity now?
No, we're not yet there.
We're knocking on the door of crypto
we're
maturity.
very close. We're very close.
I don't know anything about crypto, so I can't provide an opinion. I'm just an observer. And I've always struggled with the use cases, the outside of what I like stablecoin and what stablecoin is able to do, and the enabling, the sort of trade enabling angle of stablecoin. But there are just a lot of crypto assets that I cannot understand what they do, what the use case is, what the value is.
Oh, there are many.
It reminds me of US banks pre the creation of the Fed. So you remember, like when the US market started in its infancy, almost everybody could create money. So crypto allows you to create money.
Yeah.
Of course, some of that money creation is legitimate creation.
Yeah.
Some of that is money that has just been fiated, right? So when you then go and try and get value for that money that has been created, I don't think there is enough people to back that value that has been created. So eventually, I think a lot of assets in my layman TradFi mindset is going to fall off.
Yeah, naturally.
But I like blockchain as a tech, right? And I think the biggest problem with crypto is the part that they put currency after it.
The funny with crypto naysayers is that they hate crypto so much, but they try to balance it out by saying, I like blockchain.
No, because I went in 2020 when this thing was going crazy. I went down the rabbit hole of trying to understand the assets. There was a time I even went to a conference, an online conference during crypto. What I found interesting was
what date was this?
This was around during COVID, so during lockdown.
Oh yes, that was the wrong time.
Yeah, during lockdown. So I don't know, but what I found fascinating, and the reason why I got really interested, I turned up at this conference, virtual. It wasn't physical, and everyone there was like, I was the oldest guy, right? The average age was like 18, 19. And when I asked these guys, what did you do? Like, PhD, MIT, rocket scientist, Imperial, I'm like, okay, fine. If all these smart young people think there is value in this thing, I need to pay attention. So I went down the rabbit hole, but it's either I was too stupid to understand what was going on, because I still don't. I do at a superficial level, but I will go and read project use cases to try and understand what that project is trying to do. I got invested in Axie Infinity, for example. And I chopped serious cane. So I've been down the rabbit hole. So I went, from that experience, I was like, you know what? I'm not good at this thing. I'll find somebody that is good at it and pay him to go and manage some money for us, which is what we did. And then I faced my traditional finance.
I mean, it's like what Jamie Dimon.
George, any questions?
It's like what Jamie Dimon says.
COVID was when they were all crazy. They were acting like cult members. You know, we're gonna take over the world.
We gotta go into buy sell or hold quickly.
We don't have questions.
Oh, you have a question? All right, please, Mike, please.
I would have been surprised.
Give me the mic. Yeah, go ahead, sir.
Very much. My name is no current address. I wanted to ask about the.
Are you drinking though?
I am drinking.
Nice.
I wanted to ask about the listing of GT Bank in London, and the way our market has, as a consequence, started to value GT Bank local. And what I have observed over the last few days, and please correct me if I'm wrong, is whenever GT goes to about 8 cents, we see the Naira equivalent going over 100 Naira, and it comes down, and Nigeria comes down with it, right? And of course, you know, I'm a market person, right? But it makes me realize that we do not value our equities very well, right? It has taken this for us to actually start to see the value in the likes of GT Bank. So what is going to happen is we know who's going to come to the market next. I'm sure if we had to take a guess, we know who will come, and we know that the price is going to follow. So my question is, why is it that locally, right, we tend to wait for, in many cases, foreign activity, right, before we see the actual value in our own companies, right? And there used to be something when I was a sales trader, whereby the pension funds will say to me, oh, what are the foreign guys doing before they take action? Why aren't we confident enough to give the right value to our companies? Thanks.
That's some kind of colonial mentality stuff. Who wants to? Good question. Please, a round of applause for him. Thank you very much for that.
Sam is a GT cult member. So.
I know Sam is
a GT
cult stalwart. Sam, my parent will take that. Because anybody else? Okay, so let's take Sam.
Sorry for the pension funds. They are just lazy sometimes.
No, it's not lazy. There is a bit of a head mentality in how that industry is regulated, right, where you get penalized for basically stepping out of your peer group. Right, so I think
even in names, even in singular names.
Well, in singular names, in proportion of equity,
ownership, even valuation.
So there's that head mentality. I mean, I found the whole London listing for GTCO quite perplexing from the perspective of the local market using London as a signal to determine price. The reason is very simple. There's only $100 million that was raised in London. So you are using, and then GTCO is a 2-point-something trillion naira company.
Over 3 trillion now.
Most of the free float is in Nigeria. But you then decide to take a cue from London to determine Nigerian prices. Frankly, we all as local investors should be ashamed of ourselves, right? and that is a fact. Because there's very limited liquidity in London, and what you are going to introduce into Nigeria, if you start to use London as a cue, is volatility in the Nigerian line, which really shouldn't be there. We should be able. I think GTCO is probably worth 200 naira, right? The market should be able to make that assessment and invest accordingly. Don't wait for somebody else to validate. The second part is, I don't think we have, the biggest marginal buyer of equity assets in Nigeria are the pension funds, right? And I was speaking to the CIO of a large pension fund, CFA, extremely brilliant guy. I hope I haven't given him away. I hope you have. Most of them are CFAs. So I was like, this was the time when GTCO was at 30 naira. Fed Bank, I think at some point it was like 20 something naira. And I'm like, guys, you are running long dated liability in your pension fund. Equity is probably the longest duration you can find in assets, right? Why are you not deploying significant level of capital in the market? You know what he told me? He said, I am a pension fund administrator, not a manager. right? So that goes to tell you what the mindset, right, of, it's not about smartness, it's the institutional limitation on how those pension funds deploy capital. And then a huge pool of marginal price setters in the market are the broker dealers that are running large prop books. This is hot money, high expensive capital. So they don't have the staying power to take a view. So they will wait for momentum to be created, jump on it, and then when the momentum unwind, they get off. There are not many deep, fundamentally driven asset managers in Nigeria. So we are just hogging momentum. So when the foreigners come and the ones that are willing to do the work, we wait for them to give us a price, which is really sad because we should be the one setting the price that the foreigners buy assets in. I mean, also, it's criminal. It's annoying that a foreigner will outperform me in Nigeria. Yeah. I mean, it shouldn't happen.
But also,
you agree with him?
Yeah, no, but also, I think what was happening technically as well is, GT Code London, GT Code Nigeria is fungible, right? So I think some people were looking for that arb, where they were doing that reverse arb. Because, normally people would buy in London, wait for it to go up and then sell here. But I think that when you saw GTCO LSE or GTHC LSE trading maybe 118 and this was 105 or 102, you thought, okay, hold on, I can get a quick 10% if I buy here and then go there. So what you saw was the demand coming in here, pushing the price up because people were coming in here when it traded higher, you come in here, you move the stock there and sell there.
But it takes you about 10 days to...
Because it takes about 2 weeks. It's about, So let me ask you, it's illiquid. So I think they got the calculation wrong.
Let me ask you guys.
But I think
let me throw something in here. And I'm trying to just maybe puncture your analogy, Sam. So yes, you've said, why is it that we tend to wait for maybe the LSE to drive market prices before we see prices go up? And we've seen that happen with Airtel, we've seen that happen with Seplat. So GT is not the first time it's happening. But don't you also think it's because of how shallow our market is? So imagine that you have a very shallow market. You only have max 30, 40 stocks that you can invest in. And in that maybe 40 stocks, banks are probably the most liquid, right? That you can actually go in and exit your money. And then you have a London Stock Exchange with how many stocks listed there? Probably close to 1,000 or whatever, I don't know. But I know New York Stock Exchange is probably over 5,000 stocks. So GT Bank is just one small stock in that entire exchange. And so for them, repricing GT or pricing GT at the sort of multiples that they think it's valued makes sense. But here, it probably won't because GT is probably just a big fish in a small pond. So don't you think that's the problem we have here? The fact that we have a very shallow market.
I mean, I'll take the inverse of the argument because I would think that by definition, because GT's London is relatively illiquid and very small, a lot of fund managers can have the luxury of ignoring it, right? It's not in any index. You don't have to own it, but they choose to own it, right? So clearly somebody is looking at it and making a value judgment that the company is cheap enough and the risk makes sense, which we don't do enough. And I think Biodun is right in the sense that like we need to do more fundamental work, right? How do you price a business that had basically 80% of his assets in T-bills and bonds and deposits with the central bank, at a 50% discount to his equity value? That is wrong. Any fund manager that looks at that number should be deploying capital.
Okay, so Sam, so if GT is worth 200, then is Access worth 100?
I don't want to answer that question.
All right. Okay. So we move on to buy, sell, or hold, guys.
We are CarryWise, an investment company and wealth manager to a thriving generation of young Nigerians. From the very beginning, we've put building and protecting wealth at the heart of everything we do, equipping you with the tools you need to design an investment plan that works for you in ways that won't take the style from your lifestyle. With investment products ranging from naira and dollar-denominated mutual funds, halal, sports circles to money duo, we have set up our customers to become financially free. Managing wealth is our lifeblood. This is who we are. And we have stayed true to our mission to make investing as easy as sending a tweet. We educate and empower young people to develop the investing mindset because we understand that anything worth building takes time. This is why we are passionate about wealth and why we are licensed by the Securities and Exchange Commission to move you beyond the potential you see today to the untapped financial possibilities you desire tomorrow. It's time to do wealth differently. Cowrie Wise. Invest wisely, grow wealth.
By the way, buy, sell, or hold is where I tend to ask the guys on the gang here what they're buying, what they're selling, what they're holding. So buy basically means yes, sell basically means no, and of course hold means they are neutral. And please join me as well. If you have any buy, sell, or hold questions to any of us, feel free to ask us. So my first buy, sell, or hold would be on the GDP numbers that we've just seen. And we've had a lot of arguments around, GDP numbers and whether it's net positive or not for the Nigerian economy. And so I want to start with from the left. So I'll start with Tunji first. Buy, sell, or hold. I see you catching you're trying to where's this guy heading to? Okay, buy, sell, or hold. You've seen railway, pipelines, fastest growing in the economy. It's actually been growing fast for the last 6 quarters. If you check data.
Yeah.
Buy, sell, or hold, that is a subsector to invest in over the next couple of years. Buy, sell, or hold.
What kind of question is that? Okay, so so I do believe those sectors will grow. I think they will continue to expand, especially because the government is bullish on both of them. However, I just don't know where to invest in the sector. That's the problem. That's just my thinking. I don't know where I'm going to put my money in rail. If the government is building the rail, outside me being the contractor that builds the rail system, where else am I going to invest?
You're in payments, aren't you?
I'm in payments, yeah.
Yeah, so how do people pay you when they want to travel?
Yeah. Bye. Bye. Actually, I didn't think about. So what I was really going through my head was where does an investor plug in? Yeah. The service
that
sector,
economy is an entirely it's
anyway,
it
is.
Yeah,
It is
I mean,
massive.
for me,
So
based
buy.
off a lower base, I'm a frontier guy, right? So elephants don't gallop, right? But small ants supposedly do, right? So I like those small frontier industry sectors, companies, whatever it is. So it's where I think everything is going to. So it makes sense to buy. For me, I'm a buy.
Sam?
Buy for me.
Probably hold. I don't see how I can make money in the sector with the sort of capital pool that I manage. I think if there is creativity in the industry to securitize opportunities in infrastructure, I'm definitely interested. Yeah. I think there's huge opportunities in tolling roads. There's huge opportunities in airport. I'm interested in airports, right? So if there is privatization there that is clean and the liabilities taken away, especially the labor liabilities, yes, I will.
So if you're interested in privatizing airports, why are you not interested in privatization of rails?
Because you have to look at the numbers. I just don't think that we have the sort of income levels to justify making an economic return in rail infrastructure directly.
You don't think we do?
I don't think
With the
we
sort
do.
of population we have, with the sort of
For me, the numbers make sense. But on the top side, right? On the macro
Why
side.
are you going to price it, right? Think about it, right? How much does it cost you to travel in Milan or travel in? Because at the end of the day, we don't have any local productive capacity in this thing. The only thing that we're going to save is the labor cost of running the thing. But the whole capex is going to be a dollar-based capex. So you cannot
spread that against the population that you have. I mean, are you comparing our
but how many
population with the
people have
population
the
in Milan?
income levels to get on this train?
Population reduces the price, doesn't it?
No. With the population that would use train. So
What's the price from Lagos to Ibadan? 36. What's the minimum wage?
30,000.
70, right?
70,000.
Right. So will you spend 10% of your income going from Lagos to Ibadan 2 times a year?
Compared to the alternative.
So it's the alternative
What's
that
the
you really
alternative?
need to look at, because if it is 3.6, rail would definitely be cheaper, and rail is
See,
cheaper.
I think rail should be done. I think government should run the rail.
Yeah.
There's positive externalities. There are areas around rail value chain that make sense for private capital like ours, right? But will I be investing directly in rail assets? I think it's about how it's structured, how the pricing works. But the problem is that the duration of a rail investment is so long within the context of Nigeria that I'm not prepared to take that risk.
But isn't
Maybe not for you, bro, but the pension funds definitely need to look at it, because if you look at the blue line that Lagos has created, it's usually full.
The rail in Lagos will make economic sense.
I'm talking real nationwide. So you're talking.
Right. But
Lagos,
do rail in Bonu.
nobody's doing really.
And bring
Bono.
private capital there.
Nobody's doing really Bono. Of course, we're talking about locations where these things make sense, right? So you have blue line, red line, green line in Lagos.
So pension funds should be investing in
pension funds should be, 100%.
Exactly.
100%
Definitions.
it should be,
Because
yeah.
but the thing again is proper structuring.
Sticky money.
Because
Yeah,
Nigeria is a crazy place. You just change of government, and then all of a sudden there will be a rule that changes the economics on. When you are looking at a real project, you're looking at payback period of probably 7, 8, 9, 10 years.
Yeah. That's why it's a pension money.
So you need that kind of long duration,
sticky capital,
long duration liabilities to match that kind of long duration assets. So should pension fund be investing in real assets?
100%.
Of course. For me, as hot money, quote unquote, I can invest in value that gets created as a consequence of rail. So for example, like agricultural extension services, when you have rail connecting rural area to urban centers, start to look very, very interesting. So I would deploy capital in that environment.
Refrigeration on the trains would make sense.
Yeah, so that there are little, there's a role for everybody in this market,
Everybody
right?
can play a role in
There's
this.
a role for, but I'm happy about the sort of conversations we're having, because these are not conversations that we used to have like 3 years ago, 4 years ago, 3 years ago, 4 years ago. The conversation was that how much dollars are you buying? Right? Now we are talking about where is the best way to make your return on investment. This is why, like, I think I've said it here before, that I mean, for all these government scenes, I think from an economic perspective, like you can't score them quite low. And frankly, anybody who is providing an alternative to this government is not providing an economic alternative, because all the things that they have done is what anybody else would have done. You could argue that sequencing wasn't right. You could argue that the pain didn't have to be this much. But you know, it's Nigeria. We do things in chaos, and this is no different.
All right. I was going to get to that buy seller hold, but before then, buy seller hold. MPC is meeting in September. They've held rates for a year now. I don't know how long more they want to hold rates. So buy seller hold, Tunji. MPC meeting in September, cutting rates finally. Buy, sell, or hold.
I'm buy. I've always been buy on this. I still believe that there are other ways to structure what we're trying to do. They should cut rates, because the real sector is dying. The people who need the capital, and forget inflow.
But we just said here now,
yeah.
but their numbers are going up. Revenues is. For
those
those that are listed,
those are the people on the capital market. I'm talking about the real guys who are actually, because they're a handful. How many companies are listed on the Nigerian Stock Exchange? Total. And these are public liability companies. So for you to get to that PLC point, you have crossed startup, you have crossed scale up, you have a proper formed company. But I'm talking about those companies that are in that gap between I just got an idea in my office to I'm listed on the Nigerian Stock Exchange. Those companies are in a limbo. So
I know. But that is not the company that the bank is going to extend credit to.
It should be.
But I don't know. I mean, that's why you need to develop an alternative capital system, like a venture industry, early stage, early risk, angel kind of stuff. Because a bank's primary function is a fiduciary to ensure that deposit is safe. That bank is not going to be lending to a startup that is just starting an idea.
No, I don't expect it to.
I mean, even though we've seen a lot of banks lend to so-called, mature companies
and still gone kaput.
Like we're talking about there was this bank that lent money, and then the asset was at Marina. So,
at Marina.
What bank was that?
What bank are you talking about?
I can't remember the name. I don't.
Yeah, so
sort of expected them to cut, but not surprised it didn't cut already, right? So I expected a 50 bips cuts. But when I saw core inflation, food inflation go up, I am not surprised it didn't cut, because generally we can all admit we are in a disinflationary environment. Even though inflation is still high, I think that there's some pressure on the central bank side to actually cut. So I expect them to cut in September, maybe 25, 50 basis points.
I kind of know Sam's answer.
Sam is.
Well, I'm hold. Let the data decide. I would just say one thing in the conference, in the after decision conference meeting today. Cardoso said something which caught my eyes. Is that my objective is to bring inflation down to single-digit level.
Yeah, he said that.
When the central bank governor tells you that, you know that it's going to be tight for a while.
So you think he holds for the rest of the year? Because we're not getting to single until at least Q4 2026.
Let the data decide. But I think what he wants to see is a significant level of positive real interest rates.
Yeah. Well,
all right.
so
Last buy, sell, or hold. We've seen a year and a half now of these policies from this current administration.
Of the what?
Current administration.
Yeah.
So, I mean, so
Uncle
in
Jay,
general,
you know there are people here now.
buy, sell, or hold to the bonomics. Buy, sell, or hold to the bonomics in general. Whatever you call it. Whatever to the bonomics means to you. Buy, sell, or hold to the bonomics, Tunji. Be careful what you say.
So I'm a holdish buy. No. I don't know why you guys are laughing. It makes absolute sense to me.
That stuff doesn't make any sense at all.
Sellish buy.
I told you guys, buy means yes, sell means no, hold means I'm neutral.
It makes
what
perfect
does
sense.
holdish buy mean?
So
Like, what does that mean?
I am holdish on the buy, as in like.
He doubled down. Shut the buy. Hold on the buy. I was give me a minute. Give me a minute. Buy. Give me a minute. I'm about to buy. I'm about to buy.
Give me a minute. So there's a lot to appreciate, and honestly, it's simply that base effect, just simple base effect from where we're coming from. Anything would seem better. You get from this monetary policy. There's hardly ever fiscal policy anyway. Investment in capital projects, whichever way you're looking at it from, it just looks better, right? From where we're coming from. However, there needs a lot more to be done. I think the guy feels he's Machiavellian leadership tactics.
No,
I'm telling you,
put your money where your mouth is. We went to this stuff explain like this.
I've told you.
Okay, Arnold, buy, sell, or hold.
That was what I was explaining before I stopped me.
Buy, sell, or hold.
Yeah, so for me, it's a buy, right? So I think the reforms have been painful.
Wow.
That's a straight up buy, bro.
Yeah, the reforms have been painful.
Wow.
I on the monetary side,
Time to sell.
the fact that Arnold is a buy is a huge whoa. No, but listen, I didn't. It's like I hoped, but I didn't expect. Right, I hope that things would turn out how they're turning out, but I didn't expect it to. I think the reforms have been painful, but things are kicking in on especially on the monetary side. But on the fiscal side, I think there's been just an over-exaggeration and hyped expectation. And I mean, now we all know that the budget was just, we're not going to get to 2 million barrels. And we're not going to be able to mobilize our revenue.
We're not going to hit 1 trillion.
But you're still buying.
Yeah, but I see, things kicking in and things making sense. For me, it's a buy.
Sir?
Well, it's a buy. There's still a lot of work to be done.
Yeah.
It's a buy because it's come at great cost, to be fair. And I don't think we needed to be here, right? So I think hopefully the government can take some level of accountability, that there are slow relative action, especially on the monetary and the fiscal side. really created a crisis that, an adjustment was inevitable. The scale of adjustment, however, could have been presented if they were a bit more forward-looking and they've anticipated some of these before they came into power. It felt like at the early stage of this process, they were learning on the job. And then they got it. You do feel that, right? They got it. They got a hand of it. But decisions that needed to be made, tough decisions on PMS, on exchange rate stability, liberalizing the exchange rate, passing tax reforms. Having the political capital to pull this off, right, is impressive, right? So now that we have some semblance of macro stability, we need to unlock strategic investments in key sectors to catalyze an investment-driven growth, right? The ability for this government to do that is yet to be seen, because that is the second leg of growth that we need to,
which is
ensure that this macro becomes.
So give me a minute.
All right. So,
but having said that, reforms take time. Typically, when you look at IMF data of countries that have made this sort of adjustments, the fastest you tend to, the number of years you tend to wait to see benefits is between 3 to 5
years. Yeah.
Right? Obasanjo went through this. And I told you guys, when I was launching my fund, I went to go and read all the IMF Article 4 between 1999 and 2004. You need to read those articles for yourself. It was very, very pessimistic. And then between 2003 to 2008, we had a generational opportunity for wealth creation. And then we had growth that trickled down, right? And positive economic growth on the back of that. There is a very strong feeling that we are about to repeat the same thing.
All right. So last buy, sell, or hold. I hope that's the last. Last buy, sell, or hold. Exchange rate, the naira versus the dollar.
What's that?
Crashing that 1.5 floor.
Oh, okay.
Before the next MPC.
MPC is
buy, sell, or hold. Yeah. Are we going to see a sub 1.5 exchange, like below 1.5, 1.49 or whatever? Are we going to see a sub 1.5 exchange rate before the next MPC in September? Buy, sell, or hold. Tunji, quick one, please. There's no time. Just buy, sell, or hold.
Hold, sell.
Because there are people here who are like,
I'm hold.
Hold.
No, I was going to say, but I'm hold.
Hold. Arnold?
Yeah, no, I don't think we do that. So it's a sell. I'm a sell.
Okay.
I'm a sell. I don't see why we strengthen.
I think we do.
At the end of Q3.
No, I think if CBN, right, can ensure that NTB rates are close. NTB Treasury bills are basically the money transmission mechanism is intact.
Omo is what almost determines FX more than NTB, don't you think?
I think both, but you are right that you know what? I think breaching 1.5, I am a buy.
Yeah.
On second thought, I'm a buy.
I'm a buy too, by the way.
I'm a buy.
All right, I know I said last buy, sell, or hold, but are there, just before we leave this session to the next one, are there any industries you guys want to sell today? Like, you know what? If you're in this industry, sell. I just feel like going pessimistic. Is there any industry you want to sell?
In Nigeria?
Yeah, Tunji. What sector do you want to sell? Like, man, if you're in this sector, just sell. Like, there's no hope. Like, there's nothing happening there.
I don't see one.
So you're holding?
No,
okay.
I wouldn't sell
That's
any.
A hold. Like, there's none. So none. Okay.
Yeah, I'd have to think through that. I need more time to think through it. I can't think of one to sell. No, as in just dump.
Yeah, so you're bullish on all industries. All.
I'll say bullish on all industries.
Yeah,
I'm not bullish. I'm just not.
So you're not selling any.
I'm just not selling any.
From the betting industry to entertainment to sports.
I need a method, right?
To whatever, to manufacturing. All.
No. I wouldn't. Okay, if the Chinese come into the cement sector, I will sell it.
But they're already in with waxing, no?
Well, the deal is not closed. But the day the deal closes,
you're done with cement.
There's a saying that when Chinese enters the room, profit walks away. Right? So, and I know that they are going to debottleneck that plant. They're going to add capacity. And the Chinese have basically, they're not profit driven like that. They can run that thing on 20% EBITDA margin.
That's one thing they can do. They can do anything you can do, but cheaper.
Yeah. So I will sell cement if that deal closes and there's clear signs of rapid capacity expansion in WAPCO.
All right, great. So I know it's not the end of the year yet, but I just wanted to ask you guys so far.
Somebody
Is
has
there a question? We're gonna get to you in a bit. So far this year, right? It's not the end of the year, but so far this year, Tunji, who's been your man of the year? I mean, man of the year also means woman of the year. So who's been your man of the year so far?
In Nigeria?
In Nigeria, yeah. In Nigeria. If I say global, Tunji will tell you Trump, so I don't want to say global. In Nigeria, who's been your man of the year this year? Who's been that person? Anything. Anything, really. Anybody.
B.
He won an award, right? He won an award.
Cardi B.
That's Cardoso?
Yeah.
All right. Arnold?
Ah, gosh. I don't know.
You've made too much money this year, Arnold. Come on. You've made too much money. It's got to be Jude of the NGX. or Timmy.
Yeah, let me say Timmy. Timmy's the man of the year.
But what did
I mean, NGX. It's a tough one. Yeah, I don't know. NGX. Timmy's been my man of the year.
Oh, okay.
Since you put that name.
So I must be your man of the year.
Well, Shego's had a good run this quarter, though.
Shego's
had a wonderful run.
GT.
Yeah, GT. He had a wonderful run.
Yeah.
That's this quarter. This year.
Run.
Yeah. Year to date.
He's had a good year. He's had a good year. He's done really well.
I have 3 candidates: Shegun, Cardi B, or Taiwo Oyedele.
Taiwo is a good, strong contender. Yeah.
I don't know.
But the thing is that Cardi B sounds to me like. Does
Cardi B changed the fortunes of this country. He did.
Can you remember
So Cardi B.
the Headies Award when Olamide was like, every song this year was a hit, back to back. That was with Cardi B. He's just been going home runs.
It's Cardi B, but honorable mention is Taiwo and Shegun.
Yeah.
Question quickly.
Okay, yeah, good evening. Thank you very much. My name is Frank. So I wanted to find out, taking a look at the relationship between gold and, I think this question goes to Arnold, the relationship between gold and the Fed rate cut. What do you think is going to happen? It looks like anytime Fed cuts rates, we already see gold rally, and right now we've seen gold hit its all-time high a couple of times. What do you think would be the relationship? And it looks like there's I'm not seeing that decoupling between gold and Bitcoin, because anytime gold rallies, you always see the Bitcoin coming down. But what do you think is going to be the relationship? That's one. Secondly, Access Corporation. You made mention of something, Ugo. You said Access is supposed to be going towards the 100 naira
ask you the question.
Exactly. Do you think that it's undervalued? Is it undervalued? And at what point do you think we're going to have that explosion?
Wow. Explosion. You had to use that word.
This is Access. Okay, so I think that there's been an inverse relationship between gold and treasuries that we've been seeing for a while now. A couple of reasons, because if you look at the larger, the structural change that I constantly badger on, right? So you're having an exit of US treasuries and an entry to gold of central banks. You're also seeing it on local investor levels, for example, like Japan, for example. So Japan has run. Japan has been in a disinflationary, negative inflation, or just inflation environment for a very long time. So there's that carry trade where low rates in Japan and Japanese investors buying US treasuries. So, but what you're seeing now in Japan is Japan's getting inflation. Japan is is actually the biggest holder of US treasuries.
Yeah.
So you're seeing that move anyway out of US treasuries from Japanese investors, Chinese investors, or even central banks into gold. So you're seeing that. I think that, although I think that the US inflation still goes up because you're seeing 20, 30-year treasuries pricing in high inflation on the long end in US. If the Fed cuts, I still think, because I don't think the market is necessarily looking at the Fed cuts to buy gold, they're more looking at the structural change that's happening globally. So I still think that you're still going to get that inflow of gold from central banks regardless. And I still think, and I think a lower lower US yield will still discourage that move that you're seeing anyway with global investors like Japanese investors and Chinese investors. So I'm still seeing that trade of buy gold, sell US treasuries going on. And I have that trade on. I've had that trade on for maybe 9 months to a year. I've had that trade on for a while. So I still see that move going.
All right. So quickly, so I think that Access Bank, in terms of Access Bank shares, I think Access Bank shares will go up. We've seen it go up 20% already, or 15 to 20% already this July alone. And that is not just because of its fundamentals. I actually think it's undervalued despite some of the challenges it has. And I think it will ultimately go up because of the bandwagon effect. Because typically investors will say, look, if you're pricing GT at maybe 3 or 4 times earnings, and you're pricing Access at maybe 1.5 or 2 times the earnings, you would want to adjust that a little bit up. So the bandwagon effect, if for anything, would increase its valuation. So I do think that yes, so long as you continue to see an increase in the valuation of Fugas, Access Bank would also increase in its valuation. And we've seen First Bank, for example, First Holdco. First Holdco has gone from 25 naira or so coming into July to 30 something naira plus. So if you've had First Holdco for, if you bought First Holdco a month ago, you're probably in the money right now. And now, let's not confuse things. It's a different thing if you're going into certain equity classes for the short term. You want to go in, make money, and you get out. But there's some equity classes that you might want to buy and hold on to because you think that they are fundamentally undervalued, right? Mm-hmm. So a lot of Nigerian banks are actually fundamentally undervalued despite the challenges that they have. Mm-hmm. Because when you have a bank that is valued at 50, some even 40% its book value, take as much write down as you want. It's almost as if someone is buying your company for half the price. Are you going to sell your company for even a third of the price, right? So that's basically how you see some of these things. But as we said here on this show, price is one thing, value is another, right? Mm-hmm. Price is what people want to pay for something. And so the fact that you're seeing a rally in the prices of Fugas banks now, expect that bandwagon effect to continue to happen. You've seen Stanbic. Stanbic wasn't even in the picture.
Stanbic is not bandwagon effect.
No,
it's
but it wasn't in the picture.
Driven
it is, but if GT had not touched 100, I don't think Stanbic would have touched 100. Because Stanbic was fundamentally Stanbic is actually worth more than 200 naira per share.
I think so.
Yeah. But if GT had not touched 100, Stanbic would not have moved. So investors basically saw it as because Stanbic has always been the most highest priced bank. I'm not saying in terms of valuation, but in terms of price. It's always been priced slightly higher than GT. And so that's why. All right, one more question. Ooh, we're out of time. All right. Yes, sir.
And it's my comment on Man of the Year.
Yes.
And I'm pretty surprised that nobody mentioned Aliko.
Fair point.
And I tell you why.
Fair point.
I tell you why. Take out 20 billion investments from this economy right now, and everything we're talking about is going to be different.
But that investment was made years ago, though.
Yeah, but the benefits of it, we're now getting the benefits in the economy. So I think for me, mention of Man of the Year for this year, 100%.
Yeah,
Is there?
Aliko.
I agree.
Aliko.
Yeah, we all agree.
So tough call. Tough call. Anybody else before we leave? All right.
Good evening, everyone.
Okay, Wade.
Okay, I was listening to your buy, sell, and hold, Ugo, on the railway lines. And what everybody was looking at was, I just had a comment on this, and then I'll ask Sam a question. Everybody is looking at the asset creation, which is the rail lines. The other ancillary asset is going to fund them. Because when you consider the fact that you need the turnover, you said 3-6 to Ibadan. How many coaches leave every 15 minutes? who is considering all those things. So those are things that we need to consider from an economic perspective, because it's the number of carriages that would create that value at the end of the day. The blue line has 2 coaches, am I right? When are we going to get like 20 coaches? And like Tunji rightly said.
Yeah, which is the growth we're talking about.
Yeah, which is the growth you're talking about.
And then currently we're carrying just human beings. They're going to carry more than that.
So if I want to leave Ado-Ekiti at 6 a.m. and get to Lagos at 7:45 to my what's called. So you need those coaches to be there. So those are huge investment opportunities from that perspective. So I would rather say buy on that subsector because it's going to grow. Everybody's just looking at the NRC, but the private sector needs to play in it. The same way the private sector is beginning to play on the ferries in Lagos. And you would see those changes very soon. Now, coming to Sam, you say there's so much liquidity, but it's not translating to money velocity, which is a huge part of consumer spending. When do we expect to see that? Otherwise, we will still be 140 trillion in the economy.
But what are you going to
going that effect? Fantastic question, Sam.
No, it's a very good question. And I think that is at the heart of the challenge that we have, because here we are talking about excess liquidity, but the consumer cannot access that liquidity. And to a large extent, most of the corporates cannot access that liquidity. And that is because we've basically created money that far exceeds our economic potential to absorb it, right? And that is what has happened. If in order for us to be able to see that liquidity, we need to see growth in economic productivity, right? And because that's what is going to drive income, that's what is going to drive wages, and that's what is going to, and we need to kickstart an investment-led cycle.
Yeah.
All right. I am hoping that with macro stability, clearly we are seeing higher investment intensity in oil and gas. And it will take a little bit of time in manufacturing because there's a lot of idle capacity that needs to first be utilized before people start to deploy capex. In telco, right, I think you're going to see increase in capex intensity almost immediately post the increase in tariffs to 50%, right? So I am hoping that all that catalyzes investment and that drives growth and that drives productivity. You need to see growth in productivity, which translates into growth in wages for that liquidity to leave the banking system into the real economy. In terms of timeline, I am hoping you start to see evidence of that in 2026. If we hold on to reform, I think 2027, 2028 could be quite interesting for that productivity-led improvement in because that's what needs to happen. You need to create productive activity that capital can come into. Otherwise, the capital will just be finding T-bills and dollars. At the moment, you stop looking for dollars. It's now in T-bills. So we need to drive it out of T-bills into equity, and then we need to drive it from equity into the pockets of people. To do that, you need to drive investment. Yeah.
Comments on railway?
Comments on railway. It just occurred to me that I don't know if this rail system is still working. I used to live in Abule Egba back in the day. There's this train that I don't know where it originates from, but I usually see it at Ikeja.
Probably with big manism. That's the thing. When you're disconnected with life.
Do you know where Abule Egba is? I said I used to live in Abule Egba. I said big manism.
No, because you don't know what's happening anymore. That's my point.
Lost touch.
Yeah, completely lost touch.
As I was saying, that train was one that not only used to be full, back to back, it also had people sit on top of it. Now, I'm not entirely sure if those people sat on top of it because they couldn't pay the fees, or it was just that the train was too full for them to. But it just shows you that there is some sort of capacity to be able to take trains. And then the bus fees, like you were saying earlier, bus fees have gone ridiculously high. I think it was two shows ago, and I was talking to some of the guys downstairs, and somebody was like, I think it was bus from there to CMS was 1,000 naira. I clutched my chest. The last time I took a bus was like maybe 150 naira. I'm like, it's 1,000. You pay a whole 1,000 for bus. I mean, like you enter a bus and you pay 1,000 naira. I'm like, yes, it's ridiculous. So if a train gives you that same commute or longer for far less, of course people will use it.
Tunji is so out of touch.
Yes, I am. I don't. It's ridiculous how out of touch I am.
All right, so I think. All right, I think this is we basically come to the end of the first session of Drinks and Mics. Please, if you guys have enjoyed Sam, please give him a round of applause. for being here. That's why he's one of our favorites on Drinks and Mics. And expect Sam to be back, of course, in September when we're back. Drinks and Mics going to be back in September. Again, different vibe, different flow, more incredible guests on the show. But looking forward to you, Sam. Thank you so much.
Thanks.
Yeah,
All right.
one of my man of the year. I have to say, so I've known Sam for a very, very long time. I've known Sam
he's helped you make money
for
though.
almost 2 decades. From when we used to sit
Am I
from
that
Deutsche
old?
Bank, from Deutsche Bank days in London, and it's actually very, very encouraging to see someone move from London back here, set something up, and actually set waves and make waves. So yeah, Sam is one of my man of the year. So, everybody.
Yeah, and for those who don't know, I mean, I know it's personal stuff, but Sam relocated his family to Nigeria. For those who are jackpar,
he reverse
he
jackpar.
believes so much in
reverse
Nigeria.
jackpar.
Just like those of us who have refused to, jackpar out of Nigeria. Thank you so much, Sam, for being on the show. Thank you. Cheers. Otumba, this is the time that you come in.
Cheers.
Otumba comes in. No, you just go back to Otumba seat.
All right. Okay.
All right. Okay.
Yeah. All right, so this segment is not going to be as long as the previous one, and we're going to talk about a bit softer things of life. So, Dele, you've heard everything that was said over the last hour plus, but something that comes to my mind, and something that wraps my head all the time is this economy seems to be working on a macro level, right? But on a micro level, it's probably not working. So is this an economy that is making the rich people richer and poor people poorer? Isn't that what we're seeing?
That's a tough one.
Yeah, because it kind of feels like people who have money keep getting richer. Like, Arnold is richer than he was last year. Like, Arnold is doing things this year that he wasn't doing last year. Tunji is doing a lot more things. So what's going on exactly?
I'd argue this, right? So, are you richer if you're a salary earner?
Yeah.
I don't think people are. If we look at people's net worth on a salary basis,
Yeah.
no one's salary has grown at the rate at which the currency has devalued. So
Yeah.
either
That's why I said rich people.
so we've all probably lost money,
Yeah.
right? There's probably a 3% that have
Increased value.
made money, right? So if you either work in treasury of a bank or you do oil and gas or you do something special situation.
No, but Tumba, you're spending more now than I saw you before. You're richer.
How do you know I'm richer?
I know.
Or he just had
Those who know you know.
habits of increase.
So what exactly is that mean?
So I don't go out.
What has happened
I don't go out
differently?
as much as I used to go out.
Age, that's age.
No, but I think generally though, wealthy people tend to buy assets.
So let me
Right.
So
let me-
what's
asset
the
prices-
design?
let me put a prognosis, right?
Yeah.
So my kids are around for the summer. And I think obviously my family lives in Abu Dhabi. And this was the first time that I had to basically run my household at full capacity.
Yeah.
And I'm thinking, how is the man on the street surviving? Because what I'm spending on a weekly basis just to even keep the house running
Bro, it's ridiculous.
is out of control. From feeding, from diesel to power. Because whenever I'm around, it's just me. So I'm just like living like a bachelor, right?
Yeah.
But in the last 3 weeks, it's been like
Groceries.
this is like times 10. So clearly, it's tough on the market, and you have to make that kind of decision to say, you know what, where are we going to make those cuts, right? So if you love to fly business, are you considering some economy and some business, right? You have to make adjustments, right? That's why you want to live a false life or your money is bottomless. But everybody has to just really cut their coat and go to their side.
So Arnold, what kind of adjustments have you made so far? Any adjustments at all? Or have you adjusted upwards or downwards?
Downwards, man. I mean, like, for example, I used to fly British Airways, now I fly Air Peace. Right. So, right. So, like,
Is that a downward adjustment?
It's downward, right? Because you're buying your tickets in naira, no longer pounds, right? So I think everyone has had to adjust that. Yeah, I mean, I've adjusted. Everyone's adjusted. But I mean, going back to I genuinely believe that in terms of the wealth gap. So let's use the word wealthy and not wealthy. So wealthy people tend to buy assets, and asset prices have gone up, and that's generally what causes this divide. Is asset prices go up, bond prices on a mark-to-market have gone up, mark-to-market have gone up, treasury bills have gone up, stock prices have gone up, heck, even real estate prices have gone up, right? So if you're a salary earner, unfortunately, your wage growth won't match inflation, but if you're an equity holder, you're up 70% in 9 months.
Like Sam,
right? So that's what you're seeing is asset prices have gone up. So yes, so in that sense, that wealth gap is there, but we will have to make adjustments.
Tuji, what adjustments have you made?
I think I made my own adjustments way early. So I made my own adjustments around 2015.
So you're not
2016. No. What I'm saying is that so the adjustments
so you're not
are
adjusting right now. That's what you're saying.
No, I'm not adjusting now. So the adjustments are
living
done.
a dream. It's happened.
Wow. That's not what I'm saying. I'm just saying that. So for instance, like the import substitution you do on your household items.
Yeah.
I did that in 2015, 2016, 2017. All the like.
So are you buying Biggie Cola now? It's like if you instead of Coke, you buy
So I
Biggie
don't
Cola.
even drink.
You don't know
any
what
of
Biggie
them.
Cola is?
You know Biggie Cola is.
Elite.
I don't
You know Biggie Cola.
I
is.
do.
You know what Biggie Cola is?
Biggie Cola, of course, I know what the
So
Biggie
is that-
Cola is.
would
So
you
I
buy-
don't do that. But for instance, like cereal. Oh, that's a bad example because
But we're seeing that a lot of Nigerians tilt more towards locally made stuff
Yes.
than foreigner. Like people are now very
like British
like
Airways and
yes,
Air Peace. Yeah.
exactly.
So let me. I mean, e-commerce. So
Yeah.
at the the truth is that market is in a mess.
What market now?
e-commerce.
Consumer.
Why
Right.
is it in a mess?
The margins there are close to. Depending on the month, the margins are very low.
Wow.
Yes.
Really?
Yeah, consumer space. So you typically see that margins are somewhere around. If you came into the market in 2020, margins were around 7-9%. Today, margins in the consumer space for the things that I'll say dry goods, which is the things that people eat every day, which is pasta, noodle, margins there are somewhere around 2-3%.
So why is that happening?
And that's because there's been inflation, there's been exchange rates hikes.
Yeah, people can't.
People right now, what you find is that there's been a relatively good harvest. So people are moving into let's eat yam, let's eat gari. So in the last few years, we actually had very bad harvest because of the floods, right? This year you've had fairly good harvest where some of these produce have hit the market. So people are staying away from the noodles and the pasta.
Yeah.
And then you also find that there's a lot of investment that goes into purchasing between October and December. So people overtrade. Now, what you found is that a lot of market overtraded going into December with hopes that we will sell it all. Now, what happened is that you didn't sell everything all in December. What happened in January, February is you have to, because if you're doing manufacturers, you have a sales target you have to meet. Okay.
Yeah.
That would unlock X amount of rebates for you.
Yeah.
Now, because you can't sell
Sell
those goods,
everything.
so people start discounting those products to say, you know
Yes.
what, I'll sell at 0%, just give me volume.
Just give me volume. Yeah. So
So
at least
there's a
let me just
volume
move these
conversation.
things.
I will piece away the
Yeah.
margin and I would turn over my money and get new products. So if you actually do go to the distributor level in the market, you see that things are not pretty.
So what are people buying now? Regular consumers.
People are still going to eat, right?
Yeah.
What I'm saying is that even at the expensive or the low level, is that the customer is looking for the cheapest
Possible.
products. Saturation is a strategy.
Yes.
So maybe I should rephrase. So are you seeing more local products being consumed compared to foreign?
Absolutely. I mean, I don't deal with foreign. I don't sell foreign imported products, right?
Yeah.
That's probably a niche market, which is, I guess, the elite, right?
Yeah.
But I'm saying when you talk about the majority or 90% of the economy is people will still buy. But I'm saying even within that locally made goods,
yeah.
the margins are very tight.
Wow.
All right,
I would have thought the reverse.
I wanted to also ask, I mean, you guys, especially Arnold, you as well, Dilly, you interact a lot with a lot of like very high net worth individuals.
So what are you trying to say now? What
You're
is
an
the
informal Let me cook. You know, Tunji makes money from like the very. Tunji makes money from the very.
I'm probably on the streets more than Tunji.
You do a lot of high. So I just want to know, what are rich people buying? What are rich people investing in right now? Like where are they making money now? Because sometimes, like when you follow a lot of rich people, like ultra rich people, and what they're doing and where the money is going to, it kind of gives you an idea of where to put your money in. So where are they still in real estate locally, or is it like where? What are they doing?
I'm not rich, so I can't. I don't know if
your friends. What are they doing?
Nobody believes that,
right? We have a few of them in the.
You should ask them what they're doing. What
the
are you
audience.
guys
Exactly. We should actually
Yeah.
rich guys in the audience. I think one of the key store of value is real estate.
Yeah.
That would always be something that people would do. I'm a big believer in I think right now in the market, go for luxury. So go for the high end of, if you're going to buy in London, go for Knightsbridge. Or as much as possible, go as much to central London as you can. Because the truth is, you probably might be able to save value as much as possible. And the market I'm comfortable with is UAE, right? In that market, if you probably bought a property 4 years ago, you'd easily be up 70-80%. In the UAE, because there's a massive influx of people from Russia, Ukraine, London, coming to the Middle East, because obviously there's a tax-free economy, right? Labor is cheaper, and the quality of life is generally better than anywhere else. So you think that property prices are up 70%. The question you then ask yourself is, what point does the
bubble bust,
or what breaks the spine, right? But I think that momentum will most likely hold going into the future, just going by what you're seeing globally, right? What's happening in the US, I think, some of places like UAE, for instance, now will still see and attract a lot of capital.
I know, what are people buying?
So in terms of investments, we're seeing, if I'm looking at habits from where I sit, generally, I think investments have just increased, right? If I'm looking at assets under management, so I spoke about AUM going up by almost AUM of the assets under management of the asset management industry in Nigeria. You're seeing AUM go by almost 1 trillion naira in a quarter. Asset managers, I'm sure, in the house can actually also testify to probably assets under management of each asset manager, almost of a lot of asset managers, almost doubling in the 6 months, 7 months into this year. And also you're just seeing, from where I'm sitting, I'm seeing a thirst and a drive for foreign assets, right? So even though you're seeing a stabilization of the currency, if I look year on year, I'm seeing more requests for what's going on in the US equities, especially with Trump. I'm still seeing a demand for foreign assets.
Interesting.
So I'm seeing foreign assets, and you're just seeing general investment. So I think that Nigerian citizens and Nigerian residents are actually thinking about investing more. If I'm looking at assets under management growing, they're thinking about investing more this year than last year, just in terms of the demand. So I think, and also on the equity side as well, you're seeing in the market, you're seeing volumes go up. I'm seeing a lot of people come in asking about or buying equities, buying stocks locally and foreign.
I think there might be some savvy play, because 2 years ago, the play was just buy dollars.
Yeah.
Yeah.
Forget.
Yeah, now it's what's
it's
under.
not like now it's not a case where 100% of what I own will be in dollars, just dollarize. I think that play is kind of played out. So you might say, you know what? As long as I'm going to wear
interest bearing and
as
a
long as I
dollar.
wear a Ralph Lauren shirt, right? 30% of my holding will still be in USD, right? Now you can put the other 30 in stocks,
T-bills,
fixed income, whatever. You mix and match it. But I think that trade of just being dollars,
It's
that
gone.
trade is gone.
So isn't this a response to the question I asked Sam earlier? Like maybe this is what's driving asset prices up.
I actually do think that
Especially in
I actually do
Nigeria.
think so the buy and hold session, I think that the currency would definitely be lower than 1,500 by September.
So 1.4.
1.4.
take,
I think
hot take,
1.4. I think
hot
1.4 is very
Cheers,
achievable.
Hot take.
Cheers.
It's just 12.
Me, I'm buying more dollars at once.
Soji, what are rich people investing in?
I don't know them all. at least all the rich ones here, I don't know any of them. So
I mean, you have rich investors. So what are investors buying?
well, to be honest with you, it also comes down to putting money into assets that can sweat locally. Because what I've realized, and for startups too, I've been telling startups, maybe you want to look internally to look for naira, because there seems to be a lot of naira chasing where to go to. So if you were trying to raise, I don't know what, $1 million via safes via your Silicon Valley or Delaware company, maybe you want to look for naira equivalent, which will be cheaper. The returns can also be manageable, and then you have some set of people that you can manage locally. Naira is chasing businesses, so I think they're investing in real estate. There's a lot of buying of houses, but they're also looking for what kind of businesses to invest in. So, yeah.
Sorry to interject. There was a HNI who called me recently and wanted to buy wanted to get my view on an asset in Eco Atlantic, and I know a few guys who have assets there that they are developing, and they tell me that there's a lot of interest in buying, properties in Eco Atlantic, and these are properties that are going for like 500,000-600,000. So
but you see,
does
that's
that
the thing,
speak to
right?
that?
If you have, so the amount of liquidity you have that is just sitting there that needs to just be put into somewhere, you can't. So think about it. If you had, I don't know, 30 billion that you needed to just stash somewhere, and I'm not saying stash illegally, by the way, you made the money legitimately and you just need to put it into something productive, right? And how many 150 million naira houses are you going to buy before you're done? Even if you buy one every week with all the DD, you really get tired. So if you find property like that, it just makes sense to buy 4 and you're done, right? So those kind of assets do make sense for people who have a lot of naira liquidity.
I think forgetting even the houses, right? I think there's an opportunity. There's a real opportunity now to own businesses. I know that has conversation to say, if you had the capital, now is the time to buy businesses. So if you look at that Diageo deal now, that was a steal of a lifetime.
Yeah.
For a company that was loss making last year, is profit making now.
That's Diageo buying. That's Diageo selling Guinness to Tolaram.
Exactly. There are pockets of these kind of deals.
Yeah,
that will be pipeline
right now.
It's an opportunity. Unfortunately, a lot
Do
of
they still
that
exist now, though?
some of them, a few of those still exist.
Yeah, they
Unfortunately,
still
a lot of those things are being bought by Nigerian foreigners or Nigeria locally based foreigners.
What does that mean?
Tolaram.
Being bought by
Nigerians of foreign origin.
Okay.
Exactly. Those opportunities they exist and they're going to be massive. Which I think will, that because if you look at the dollar, the currency has devalued. The dollar equivalent of those assets, an absolute steal. So I think this is the funny thing is I talk to my friends, and my friends are saying we should be buying banks. I mean, at our age, the likes of Ike and Herbert, were owning their own banks. we need to actually start thinking about how to own a bank.
Yeah, to own a bank now, you need 250 billion naira. But let's move on to other things. I've also, I don't know if you guys have noticed, and sorry for folks, most of us live in Lagos. There's a difference in the way VI looks these days. So VI of maybe 10, 15 years ago used to be very, it's full of traffic. You didn't want to have an office in VI. You wanted to avoid VI by all means. But VI just has this sanity around it these days. And maybe because of the roads, I don't know. Ikoyi is also kind of, and then Lekki looks like a slum. What's going on? Like, what exactly is happening?
What part of Lekki? Because Lekki is
the part where you live, that your area.
Lekki is a broad.
Your area.
There's those parts about Ogun State that they still call Lekki.
I'm talking about Lekki Phase 1, basically. Like Lekki Phase 1, all the way to that second roundabout, right? And then I'm seeing people now saying that, look, I'm going to move my office from Lekki to VI because VI seems to be saner in terms of the roads are better, less traffic. So what has happened in VI that, over the last 10 years that maybe just went under our radar? You're also seeing a lot more highbrow restaurants pop up. You're seeing high rises. Seems a bit more structured now than ever. So what has happened over the last?
I don't think VI has changed much as Lekki has deteriorated.
Really? I think for me, I'll focus on the Lekki Expressway. I think since that was a private PPP that failed.
Yeah.
And ever since that deal got tanked, the maintenance on that road has been poor.
The access roads,
I mean, we're talking about like if you come to Admiralty Road today, Admiralty Road used to be like Allen of back then. I don't know if you know what I mean. Like Allen of maybe 20 years ago. Like real hustle and bustle. At every turn, it's a business property, right? VI doesn't have that reign, except maybe I don't
know. Is it that I don't know what it looked like 10, 15 years ago, unfortunately, but I'm just assuming now because I guess as time goes on, it's getting a shape or a signature. Is it that VI is getting a signature of being a commercial district restaurants, offices, and then Lekki is residential? Is that what
or
you're
maybe
saying
we should just ask the audience. Has everybody noticed anything different in VI? Because I've not seen it. But I have seen the differences in Lekki Sha. They have said
Lekki's a slum?
No, Lekki is really deteriorating. Lekki is getting...
I don't know. There's some chap... I mean, I get this message on Instagram. There's some chap on Instagram or whatever, like who's always slamming, like, real estate properties in Lekki and all that and saying they're too expensive and blah, blah. So I'm saying... What does it
shouts?
Like?
No, not that one.
I don't know.
The guy that shouts.
Yeah, he kind of shouts though. Yeah,
he kind of shouts as
well. Oh, is it the same guy?
Yeah, he kind of shouts as well.
No, but I think he's calling out. I don't want to do.
So is it that we're seeing like, are they like at the property values in Lekki? Are they overvalued today? Should those valuations remain as it is now?
I think developers
like a plan in Lekki now is going for like maybe
just dollarize their.
Yeah. That's
they
the
don't
problem.
really care what the implications are, and I think it only means that the demand
it's still there.
It's still there.
Yes.
Because if the demand is not there, you would adjust your prices.
You would adjust your prices
accordingly.
Downwards. Yeah.
But what's happened is that if dollar goes up by X amount, the price of my property goes up by X amount.
But you still see people continue to buy it.
The biggest issue is...
but I also think that we need to start calling out standards, right? And it's just also what it is.
I mean, there's a question around standards, right? Very valid. Even the one that is worse, it was that tweet yesterday about make sure your landlord your rent is not your landlord's only source of income. You know what I'm saying? Because right now, landlords are increasing rent by 100%, 120%, 150%. Right? And I'm saying is, I don't see how people are affording these things, but somehow
people are affording it.
They're affording it.
So don't you guys see a connection between higher land values or property values and commercialization? Because I kind of feel like if you live in a neighborhood where property values are extremely high and there is no, maybe local government or
managing it and stuff like that.
put some sort of
Rent control.
not even rent control, maybe land control or some sort of regulation around how those properties are sold. Don't you think that's why you're seeing a lot of residential apartments being turned commercial, even in areas where it should ordinarily be residential? And that's basically what has happened to Lekki today. So with those land prices going up, developers don't have a choice but to convert, to buy that property, turn it into some sort of, either they turn it into an office apartment or a hotel or a restaurant or a high rise.
So the gym I go to, they had a Lekki branch, which is where I used to use. But they then sent a message out sometime about 2 months ago saying they wanted to renovate the place. So I started going to the Ikoyi branch, right?
I saw your video.
So the trainers come to Ikoyi and they are working out and they're helping people out. So I'm like asking, okay, when would you guys open up again? And then the guy tells me, let me just be honest with you, right? That our landlord in Lekki has been increasing the rent like every month, every year. And now he's asking for like close to 40 or over 40 million.
40
a year. 40 million.
Million, okay.
And I'm thinking, how much in gym prices must you be able to charge for you to be able to pay 40 million excluding power?
They've shot the Lekki branch.
So they've shot the Lekki branch.
Wow.
But he had been increasing it every year for the last maybe 5-6 years till they just couldn't handle it anymore. And they just said, you know what? But then they are saying the alternative even around, if you were going to go and get a new place in the same Lekki environment, the cheapest you will get is still 30 million.
So what would you guys, so if you were to invest in the property now, you had a choice, Lekki, VI, Ikoyi, Aja, Ikeja, GRA, Sam Shonibar. Where would you be buying? Why would we be buying land?
I think Ikoyi, and I actually would play for Ikeja as well.
Yeah. Ikoyi
because there's no land available. There's no land available, which is why you see there's a lot of islands that are emerging. There's Orange Island, there's Pineapple Island.
But what are rental yields like, right? So for me, if I was investing, I look at rental because
rental yields. Rental yields in Nigeria.
So it has to be so. But I haven't done the numbers, but what are rental yields like in Ikeja versus in Ikoyi?
Rental yields in Nigeria usually.
I know they're low.
Between 8-10%, basically. So, but my question is that if you're going to, which is pretty even high, if you had a chance to live somewhere, right? Someone comes and says, Judas Berger comes and says, oh, Tunji, we like you so much. I want to build a house for you. Where would you rather build a house? Lekki, VI, Ikoyi, Ikeja, GRA?
Ikoyi first, slight Ikeja, GRA next.
Only one place is where they will build for you. Where would you want them?
Actually, we'll take VI.
You take VI? As residential?
Because there are all these clothes, VI, this like clothes.
Yeah.
That kind of
that clothes.
That clothes. I would take that in VI.
Yeah.
That's not Ikoyi.
I don't know. I think I've been to Ikeja, GRA recently though.
I haven't.
Ikeja, GRA. No, Ikeja is nice. Ikeja is nice.
He only goes to Ikeja when he has to leave the country now. So
anyway, so let's pivot quickly into lifestyle. So one thing that I've always wondered is how do we manage work-life balance, right? So for those who know me very well, my own work-life balance is table tennis. I play that.
How's your tennis coach?
I know there are some people here who.
Wow. They say you're balanced.
Anyway, so what's work-life balance for you? Like, we work too hard. I mean, I've seen a lot of people drop down and all that. So how do you balance this like, quest for money and all that with?
Personally, I like holidays.
You like what?
Holidays.
Yeah.
Take a week off to go somewhere where, and then I think one of the things that I struggled with many years ago was, even when I'm on holiday, I'm replying emails.
Yeah.
But you see, one of the things that I learned working for, I guess, a more formal company is you would get these 2 weeks in a year, which is like compliance. So if you reply any email in that 2 weeks, you get a compliance flag or you get a query.
No, repeat that.
So when you work for like big multinationals, right, you have 4 weeks of holidays, but you must take what you call a compliance or sort of a,
because they need to go through
a firm 2 week holiday.
To see what you've been
just
doing.
to see that,
Just
to
to
be
show
sure
that-
that when you're out, the work goes on.
Exactly what goes on, and if there's any fraud
You
in the
haven't done
system,
anything, yeah. So they go through your
they
system
can
to
find.
make sure.
So if
yeah.
things, so if you're obviously covering up frauds or
Trades that
anything
you-
dodgy, they should be able to find it out in that 2 weeks.
2 weeks.
You can't call clients, you can't reply emails, you can't contact anyone in the office. You must go dark for 2 weeks.
Wow.
And I think getting to that sort of work culture, just realize that even in my holidays, I try to find a way where I'm just sort of blocking off that 1 week, or at least block up some days where I'm not replying, or I only check my emails once a day. But I found out that before then, even when I'm on holiday, I'm constantly replying emails. Or I'm constantly doing something.
I didn't know you could be on holiday without checking emails. Wow.
Yeah.
So
that would be one way to do
for
it
you?
for me. Yes.
I know, what's yours? Even though
So I've taken on a healthier lifestyle this year. So for me, the best way is it's just been working out. It's just been working out. I've realized that exercise is the best. Should I use the word drug? Exercise in terms of just after stress or whether it's just overworking or depression, whatever it is. I've just found that exercise has just been so helpful. So for me, it's just exercise more than holidays, because even when I go on holiday, I can never stop. I'm still sending out an email, but when I go for a run, I leave my phone at home. When I'm in the gym, I leave my phone at home. When I play golf, so I started playing golf aggressively this year. My phone is in the car, so you can't reach me for like 3-4 hours while I'm on the golf course. And I found that taking on a healthier lifestyle has really helped with work-life balance massively, and I recommend it. So for me, that's something that has worked massively in my favor. It's helped me to be more productive at work, and also socially, it's helped me to be more productive as well.
Tunji?
This is where I now sound like a workaholic, and it's not good. So I think it started to become more important to me early this year, or after the first quarter, I had pretty much what was close to a burnout. So I'm now taking deliberate attempts to really de-stress. Working out used to be my exit, but I have now taken workout seriously.
I know what you mean.
I now taking workout seriously.
Now stop being fun.
It's now not fun anymore. It's not like
stop being fun.
Like
but you still have to make it fun, right? Sorry, because golf was the same. I started to mark my scores, and I would have a bad day, and then it's like, you know what, just have fun.
So, for instance, if you're at my gym, by the way, if any of you are in my gym, if you're lifting anything and I'm around you, just know I'm going to lift something heavier. It's just subconscious. I don't know how I do it, but I would just lift something heavier. So it stopped being fun. But I'm learning and trying to de-stress. So taking more holidays with the family, just try to spend more time with my kids, just to be able to be there more. But yeah, it's really a struggle. I won't not lie, it's a struggle.
All right, that's good for you guys.
How about you?
Huh?
Yeah.
Oh, me?
You don't have work-life balance.
I mean, I'm not asking questions. So there's a little thing that I do, though. I mean, I don't know what you guys want to call that, but it's something that I do once in a while. Right, so maybe once in 6 weeks or once in 3 weeks. Oh, geez. Anyway, so I get home, and maybe I get home like 7, and then I basically read the Riot Act. I don't want anybody to disturb me. And then I turn off my phone. I call it a reset. And then I just crash. And then I sleep till like 4.
Isn't that
a.m. Yeah, from like 7 to like 4 a.m.
Okay.
Like basically just sleep till like 4 a.m. Like, right? And then I wake up and I start working from then on.
You see, that's when it shows you a workaholic when you have to actually prioritize sleep. Like you are taking time to sleep.
That's what I was about to say. Isn't that normal? Isn't that what everybody does? Everybody sleeps after work.
Yeah, she said it very seriously.
like
I was going to sleep.
So like, I don't understand.
This is just prejudice because I explain it different. Anyway, let's just move on to something else. So I wanted to find out from you guys 2 more things before we leave. Penultimate is like the last 5 years, or maybe the last 2 years, maybe not 5 years, the last 2-3 years has been hell for startups. Investing wise, it's been terrible. Like I've got my own fair share of mad haircuts, crazy haircuts. A lot of us here have had haircuts, but nevertheless, I mean, there's always that quest to seek alpha, right? So you want to invest in a startup because you think that this is probably going to be some retirement investment down the line and all of that. So just curious to know from you guys, right, and maybe the audience as well, are there maybe startups that you're investing in and you're investing in any startup, what lessons have you learned from the past that you're like implementing? And so, for example, for me, right? For me, anybody who comes to pitch startup to me that is not making money already, like I don't see I don't see any kind of PBT. Like not even maybe. Let's even leave PBT out. Like you don't have customers that you're selling to, actually selling to, right? Like not proven. So meaning that the money you're looking for is just maybe to sort of build, like drive that volume. I ain't putting no dime in it.
But I mean, listen, it's not only startups. So how Ghana also gives some of us a haircut, and Ghana is not a startup.
I know, but I'm talking startups now. So what startups are you looking at, and what are those things that you're looking at now? Because I mean, before you were like born rate, like how much money are you spending? Right? That was typically what was the benchmark. I always thought that thing was crazy though. Yeah, like how much money are you burning every month?
But you think
so what is it now that we're looking at?
I think it's very simple. I think we try and take this stock market philosophy into tech investing. The truth is, what is a tech startup? It is a hypothesis that you need to prove.
Yeah.
That it actually works or doesn't work. Now, so you can decide at what point you want to invest in that
hypothesis,
that journey.
That
so
story.
you're investing at the very early stage, which is that I would help you build the business, which is I will give you money to go and look for the customer. Right? Some guys will come in at the point where we're looking for the customer, we're trying to ramp up. Now, but as you're ramping up, the question you ask is there unit economics for what we're doing? Now, the thing with startup is that because you're trying to steal market share from the traditional businesses,
you spend
there's a lot of freebies that you throw the customer way to ensure that you bring in the customers and you hope the customers are sticky with you. Now, after you do that, you then say, okay, how do I then get these customers to pay me full price for what I'm trying to offer? That's why the question of whether it works or doesn't work. Will the customer pay you full value for the service you're offering or not? If the answer is no, then I guess you then start looking at burn rate and, at what point you run out of capital, or are there value-added services that you need to add on to get those customers to then think about doing business with you and then paying you for the service that you're offering. Yeah. So you need to define what your risk criteria is or what your appetite is, right? But this whole philosophy about wanting to invest in a risk-free tech play is honestly smokes and mirrors.
I mean,
and number two is, unless you're doing AI today, AI is probably the only thing today that if you put in a pitch deck on the table, someone is ready to fund that idea, right? That's where sort of money is going into. right? The sort of other, I think like we're talking about fintech, like or payments that is saturated, right? And that's a lot you see in the Africa ecosystem, right? So AI is sort of the future where you raise money without actually having a product, right? But you have to define where you want to play. I
know.
I mean, one thing that
I know there's one you complain about, like that you invested in, but let's not go there. But
yeah, there's quite a few. But one thing that there's quite a few. But I think one thing that that my experience has told me is I know that I don't know, right? And it's like I think I've accepted that I might not be a good early stage investor, and I'm okay with that now. And for me, it's like pre-revenue. I don't want to hear pre-revenue. If you're not making money, don't come to me. And unfortunately, that's my view. And I'm happy to pay.
That sounds like Sam's view.
Yeah, I'm happy to pay a premium for growth stock. It's like, okay, I missed you pre-revenue, but I'm coming now that price times volume equals this, and this is what you're making. And that's where I am. So for me, I'm comfortable with being a growth investor. Because it's early investor stuff for me. There are better early stage investors out there, like Dele or Samson than I am, or even Labi. But for me, it's come to me when you're growth, when you're making money, you've been running for a while. I can see where you are, and then I can also see where the market is going.
Let's hear Labi's opinion on this, though. Please, Mike to Labi.
Mike to Labi, please.
Let's hear Labi's opinion on this. Mike to Labi. What's the mic?
Where's the mic?
Mike, I've lost.
My name is Moyo, and I work as an accountant at a small business in Lagos. My kids have a nickname for me, Iron Lady. They say I'm always so strict with money and finances. They like to spend, and I like to save. So imagine my surprise when I overheard my kids talking about investing and putting aside money. I joined in on the conversation, and they showed me the Bamboo app and their own portfolios. I was shocked. So I asked them to help me download and sign up. I was worried. I started investing a bit too late. But with Bamboo, I've learned it's never too late to start investing. My goal right now is to leave a very, very healthy portfolio for my children to inherit. Don't tell them I said that.
Pleasure to be here. I've enjoyed the discussion. Very rich. I do disagree with both of you on not liking pre-revenue companies. Therein lies the opportunity. When you back a company before they have revenues. But at the same time, fundamentally, the companies you're backing, also the venture capital investors who back these companies or angels, at the same time, they expect each of these companies to be able to do 20 times or 30 times return. At the same time, they also expect 80% of their portfolio or 70% to be zero and not give a return. So it's this paradox you're constantly dealing with. But when you succeed with the company, you do get that 20 or 30 times that returns your fund over a couple of times, or even higher than that. But in terms of, things to look for, yes, pre-revenue can be a measure. Very critically, I think who you're backing, what experience do they have? Are they somewhat trustworthy? Are they capable? Will they manage the business in a sort of responsible manner? Many times also I found, sometimes I would back some businesses because I thought I knew the industry or like that sector. But I think who you back is even more important. Sometimes you don't really even know what they're doing, but they make it work. So it's back to the importance of the person. Then I think the other thing is just, as you back it, will they, the other co-investors alongside you, are they able to keep bringing capital to continue investing? Because sometimes you also end up in this halfway house where, the existing investors can't continue to back it, and it's not sweet enough for someone new to come in. Yeah. Then you have K-leg and a problem. So that's, and then, which then comes next to, as an early investor, you typically want to be able to exit sooner. So you need those other investors to typically come and take you out. You may go for the whole ride, but usually you want to come out a little sooner. And then those who can put the deeper pockets and potentially go all the way will back those companies.
But I mean, what's exit? What's the for an early investor? What's the exit window now? Has this shrunk, or is this? I mean, like
it's shrunk. So when it comes to exits or raising capital, people always look, okay, what are my terms? What are this? Usually I first tell them, okay, this tickets. Then, okay, let's see the terms and what are you really dealing with? So opportunities to exit tend to be few and far between. So when you see them, take them very seriously because they can almost be binary. It's not, oh, you wake up today and I'll choose this exit at this time. Usually, again, in line with a lot of your discussions earlier, you need enough things in your favor. You need the macros moving in your favor that you've discussed at length. You need the micros specifically on that company or industry, again, moving in your favor. And then you need investor interest also moving in your favor. So you need these three things, which to have all at once tends to be quite difficult. So if you find the opportunity, hit it.
All right, fantastic. Thanks, Labi. By the way, Labi is a partner at Kurama Capital. Check them out. One of the largest investment company in Nigeria. Thank you so much. All right, so I just want to. What was that?
I think Bjorn has.
Bjorn want to say something? Oh, please give Bjorn. Go ahead, Bjorn.
First of all, I want to say this has been so.
It's mic on.
Inspiring, right? Inspiring. And I love the conversations we're having. So I want to drop this one. For Nigeria, right? When you look at where we are in our development, and if we're going to be honest about it, right? I love what fintech has done for us as a country. In terms of our payments, our ability to invest in the US markets like Bamboo does, general efficiencies, right? It's done a lot for us. But let's look at the reality on the ground. And where should we be investing, right? Our roads are bad, right? Every time we drive on our roads here, right, one of us has to go to the mechanic the next day, right? We have security issues. We're unable to move our food from the farms, right, to the shelf, right? Every time something goes bad in my house and I have to call somebody to come and fix a bulb or something, it's somebody I do not know who has not been vetted, right? We have people who have children. They're trying to get nannies. It's a big deal, right? We have invested a lot in fintechs, right? I think we now have to shift for all of us here, we have to shift where we are moving our investments to things that actually solve a real problem in our economy. Because the problems that fintech solve for us, right, in Nigeria are not the biggest problems we have, right? And I think you guys have such a great platform, right? And we need to start to talk about private equity in a Nigerian way. Nigeria is a very peculiar space. And we have to find a way to move capital, right, to things that are actually productive for us. We have a big problem with unemployment in Nigeria. Fintech is not going to solve that. It's going to make it worse, right? So as we look at the model that has been developed, that we have used in Nigeria that has built so many great fintechs, we have to move it. We have to figure out a way to move it to the real sector. One of the things that amazes me in Nigeria is the fact that now we're wearing the clothes that we make. So the jacket I'm wearing was made in Nigeria. Dele's pants are local. And we're doing a lot of that now, right? But we need to continue to move our capital to those things, not just by patronizing them, but by actually investing in those industries that are relevant to us. So that's my 2 cents. Thank you.
Thanks so much for that, Bjorn. I was looking for Chuma, but I think he's left. I wanted him to chime in on your point because one of the things that he's doing is also solving problems. I think that's also what Dele is doing. But guys, let's go to the last topic quickly. And I wanted us to touch on personal finance because a lot of the guys who watch Drinks and Mics all ask questions around personal finance. And so personal finance, of course, is, how you guys, spending money, saving money in this sort of economy, investing. So if you were to advise someone, I mean, I know you probably need a lot of time to do that, but let's say you advise someone, ballpark advice, spending, saving, investing, what would that be?
So,
respectively.
Again, someone asked me that question some weeks ago. What would you have done differently? And my answer was, the day I became an analyst, I would save a portion of my income in what is the de facto currency. So that's USD. That can change tomorrow to something else. But I'm saying is, because I live in an emerging market, and you go and analyze any currency, emerging markets from 2004 to now, the likelihood is that all those currencies have devalued. So there's a portion of my income that I would put in what is, that global economy, global currency, right? And I'm trying to say it's not USD because USD now is likely to devalue. So, that would be. I'm saying, imagine I was buying dollars at 100 in 2004 and sort of saved till now. That would be protection of my income, right?
Yeah.
So the portion of that to go into that. I think some of it would be equity, and I will put some in fixed income.
Okay. So that's saving and investing. So
spending. And then spending.
Yeah. Like how do you spend wisely now?
How do you spend wisely? Was that English? I mean, spending wisely.
So for me, it's basically spend now, save later. But I mean, like, what's yours?
Yeah.
No, so okay, I'll give you an example. So people wanted to buy cars maybe 7 years ago. And the question was, the car is too expensive. Why are you buying now? You should wait. And the truth is, I found that a car you bought for 20 million naira in 2017 is selling for 150 million today.
It's incredible.
So for me, I found that I bought a car back then. It was actually a store of value for me because the price I bought that car at the time, when I sold it, I actually sold it for the same price I bought it 5 years ago.
Isn't that anomaly?
Eh? It's an anomaly, but I actually did, and I think it was at the point I sold it, I told the guy, listen, I bought this car, I didn't use it, it's parked 80% of the time, I'm only taking USD for it. But I can tell you this is the service history, whatever, and he paid me cash dollars for it. So essentially I exited that position.
As you went in.
Whole, yeah.
Arnold?
Personal finance.
Personal
tips.
finance.
I know you spend a lot of your money on cigars, though, but I mean, I don't know.
So I recently got introduced to this young man in his late 20s, and he just blew me away, man. This guy, UK based, and he was asking me for investment advice. This guy already has a property, and I was like, man, in my 20s, I spent everything. I spent everything in my 20s. And I was like, man, I wish I thought like you. But listen, I mean, if the way I see it is any inflow that one gets, they should at least put 50% away and then spend 50%. And that 50% away, and that 50% has been put away. What I try to do is...
Is that possible in this kind of economy?
It is, man. It is.
It's not.
It
I know. That's elitist. I think that's elitist.
It is, man. It is.
Like, what sort of salary levels are you talking about? What sort of income levels are you talking about here?
Exactly. That's a very elitist position.
But it's... No, but there's a strictness that one needs to have, right? Where there's a part that's good. Because if you're able to buy certain assets, especially bonds or dividends, you can actually get income from some of this stuff. And I'm big on passive income. I'm huge on passive income, and it's possible. And with savings, especially when you have when you can get fixed deposit rates in the 20%, right? Why not park some cash in a fixed deposit rate that will actually make you up to that? You can get bond yields at 20%. You can get bond yields at 20% coupons. Why not do that? So for me, that's how what I try to do is I try to really buy high dividend stuff, high coupon stuff, and then there's also trading. I'm big on trading. I'm big on trading futures. I'm big on trading options as a method of income.
Can I throw in something?
Yeah.
I guess we're probably on the same. We all married and we have children and we have wives and all of that. No. The way I look at it is, we have responsibilities. But I feel like for every,
don't marry me off.
If you find a way where you can tie one of your obligations to an asset. So
yeah, 100%.
If you had a child whose school fees was X, and you had an asset that would pay for that child's school fees or expenses, that would be one way to think about it.
You guys are sounding elitist. You're looking at somebody who's just a salary earner, like, what asset?
But listen, this is not something to be done overnight.
It's not overnight, but that's the way I think about it. In hindsight, I want to tie my child today to an asset that would pay.
That child's maybe university or something like that.
Whatever. And the day he becomes 21, I would tell him, this is if it's crypto, this is the
go do it.
This is the crypto. This is the crypto that sends you to school. Or this is the property that sends you.
I'm done.
That would be an ideal world for me. So that, again, it's an ideal world. What I'm saying is, I'd like to look for an asset
achievable
that would pay for that liability.
Tunji?
So I don't know how to say my own side to everybody here, because I realize that my own experiences are fairly unique. So every hustle, I basically had to hustle myself. I'm not saying I'm self-made, but there was no fallback. There was no, if I didn't make the money, it didn't come. So my thinking really around saving investments, what you said, save, investment, spend.
Yeah.
It's difficult to do any of the three if you don't have the money to do it. Right? So Yoruba people say that the money that is not there, Dedi cannot take it. Sorry if you don't understand Yoruba because I cannot explain it. It's just very complex. But it just says if you don't have the money, there's nothing you can do about the issue. What I did that I think is maybe unique to somebody like me is no, seriously. It's completely invest everything on myself and build the capacity to be able to earn eventually. So when I missed on the first wave of this, the second wave of that, it's not as if I didn't know that we can put money here and make 25%. But when there's no money, you just be looking at it. You just be looking at it. I hate that I'm this vulnerable. But the thing about it is that I doubled down on myself, basically backed myself completely. And eventually, when I was able to earn small money, then I could go back to those assets and grow. So it's a later stage. The question applies to me at later stage. But if anybody's watching this and you are at the point where you don't have, there's no fallback, there's no backup, it's just you, family, there's no, and there's no cash, and maybe your salary doesn't take you home. I just tell you, invest in your ability to be able to earn more. Just keep investing in your ability to be able to earn more.
Build human capital.
Build human capital. Yeah. Eventually, you'll be able to answer this question. But right now, between you and I, we know that this question is not for.
Fair enough.
All right. So if I was to chime in, I think for me, if you're going to save, I would always say in Nigeria, you want to save in dollars. I really don't care what the exchange rate is. So long as you're in an emerging economy. Yes. I mean, I'm bullish Naira, but so long as you're in an emerging economy, so long as you're in a third world economy, you always want, if you really have disposable income to save, I would always say save in dollars. Now, in terms of investing, my approach is always, it depends on your age, like where you are in life, right? So if you're younger, if you're in your 20s, you would always be investing in yourself. You got to invest aggressively in yourself, because the investment in yourself is always going to pay off for you later. At least you're alive to enjoy it now. So when you're there, at least, right? So always going to invest at a younger age. And when you're much younger as well, I think it makes a lot of sense to take risk. One of the things lessons that I've learned that if I come back in this life is, when you see an investment opportunity that caters to young people, like a lot of young people just like that. Like, it's very sticky with young people. It often pays off hugely. Whether it was comics of back in the days that has now turned out to blockbuster movies, or whether it is ice cream or Coke, or whether it is even cryptocurrency, so long as it's very sticky with a lot of young people actually find value in those things, somehow it always pays off. That's what I've always thought as well. That's something that I've learned. So, like, if you're in your 30s, you're getting to your early 30s, the lesson here as well is you got to be in a position where you can own a property. Like, you got to be able to own a property before you're 40 at least. Now, the reason is that when you're past 40, then it starts to become a lot more difficult, because property ownership in a sane world is mortgage, right? And they look at number of years that you have. And retirement age globally is usually 60 or 65. So you got to look at those things.
So they'll be like,
and in the capitalist economy, right, which we are gradually creating here, people got to realize that we're basically the economy you're going to see in the next 10 years is not the economy that you saw 10 years ago. You're going to be seeing an economy that's a semblance of maybe what you have in China, or maybe what you have in the US. That's sort of purely capitalist economy. So being able to own an asset would always be a major stepping stone to wealth creation. Like, no two ways about it, because when you own an asset, let's say maybe in the UK or in the US or somewhere in Europe, then that just opens a whole lot of doors for you, because with that asset, you can buy more assets, you can get more loans, you can invest in more companies. So in your 30s, your early 30s, that's got to be one major goal that you get. So you invested in yourself in your 20s, you invested in risk assets that pays. Then in your 30s, you've got to be able to invest in real estate. And then one other lesson as well is, please, when we read Warren Buffett, don't be stupid. Because a lot of us read Warren Buffett so stupidly, because you thought that everything Warren Buffett was saying was applicable here in Nigeria. It's not. Stupidly, no. When you buy it, I said hold it forever, and I lie. Not in Nigeria. Because there are a lot of assets that were bought here that if you held forever, you'll be dead. Right? So, and that's because the economy that we have here is completely different. So when you invest in an asset in Nigeria, you have to, like I see a lot of people invest in assets and they basically just forget about it. I don't buy them and then you're gone. You gotta invest, as you're invested in an asset, be vested in that asset as well. Like, understand the asset itself, what it means for you, why you're investing, your exit. Even if your exit is steady, you have to ask yourself, mentally, what's your exit in this asset? Like, what are you holding this asset for? When do you intend to sell it, or what do you intend to make from this asset? Right? I think that's also something. And as you get into your 50s, like some of you guys here that are in your 50s, then you gotta start thinking of things like trust, wills. I have friends from families that they can't see each other eye to eye because their parents maybe willed assets to them, and you know what I mean. So I think we've got to start to think about things like that. And
Actually, your 40s, not even your 50s.
Even in your 40s. And the funny thing about the life that we live in now is we're now in a world where it's more digital assets, right? Because I'm asking myself, like, so you have all these crypto assets, that were bought years ago, and it's all stored in some wallet, maybe in MetaMask or some maybe offline wallet. But who knows about it? Like, your lawyer doesn't know about it. Your wife doesn't know about it. Your husband doesn't know about it. Your children don't know about it. So who knows about it? So if something happens to you tomorrow, what's going to happen to it? Or you have stocks in some portfolio somewhere with one stockbroker and nobody knows. What?
I said, I don't think you want your wife to know about it.
I'm just saying, like, so those are some of the things that, like, you've also got to start to think about now, because you're seeing a lot of those assets and then, like, you own them, but nobody knows that you own them. Anyway, so enough of my ranting. Finally, guys, what are those things that, you're buying, luxuries that, because I've seen a lot of people buy luxuries as assets these days. So I just want to, like, mentally, so what are those luxuries that you think that, you know what, I want to buy these as much as I want to enjoy it is also an asset, because people are like, women buy gold and end up selling it later, right? So for guys, what are those luxuries? Is it wristwatches? Is it an iPhone? Is it your shoes?
So I buy art, but I think it's the biggest scam, man.
Art is a scam?
It's a scam. But I have quite a bit of art. So I have a collection, right? So I started buying.
Maybe you're buying the wrong art.
I started buying art as an investment because one of my mentors is a huge art collector, and I worked under him for years, and I just got into art because of him. And for me, it was like an investment, because I said to myself, whenever I have liquidity issues, I can easily sell this thing. Man, when I had liquidity issues, I could not sell one thing. So I just have like, I have some art on the wall. Yeah. I have some art stored in somewhere in Accra. I've got some art in London, because I was buying this thing thinking I'm going to be able to sell this thing. You were buying the wrong art. Maybe. And then it's like, when it was time to sell some of this stuff, I'm calling Sotheby's in New York, and they're telling me, yeah, you've got to now ship it to them to get it for appraisal. I'm like, I can't afford to ship it. I'm trying to sell it because I need money. So but I mean, art is something that I buy or I bought. But I think I fell for a scam, and I still try to buy when I can. And I keep falling for this scam. But art is something that I buy.
I think
rings.
I'm more of a I'm actually more of an experienced guy. So I actually spend more money on
experience,
things I want to experience.
No, so I'm talking about, like, if there are things. Sam, are there things? Are you into art as well? So what luxury do you think you can buy that you can resell? What?
I'm not into anything that doesn't produce cash.
But there are people who buy wristwatches, people who buy wine. I met a guy once. I met a guy last December, and he told me that his because I told him that I like to buy whiskeys and keep at home, and he says he's the biggest whiskey collector in Nigeria, and I'm like, how? He says he has houses in Lekki, one here, where he basically stores wine, whiskey, and stuff. And that if he values those things now, can he sell it?
Yeah, that's always the question, right? So these are largely it's
psychological,
right? So yes, I like to protect the lead, but you need to find somebody that wants to protect the lead at the time when you
really want to sell. Exactly, same as art.
What to protect the lead is. If you take a protect in one shop, then they'll give you a massive discount. Right?
So I'm big on art. Or at least I've always been big on art, but I've just only over the last couple of years been able to start affording to buy the small ones. But I generally understand that art is subjective, but it's also not liquid. So it's not like I can just
Seriously,
I can just take the art piece and just bring it in here and
But
say,
Otumba just said
who
now
can
that he
buy?
bought a car. Yes, I'm assuming it's a
So
luxury
a
car.
car is more liquid than art.
liquid than art.
Because the value of the car is apparent to almost everybody.
Yeah.
The value of the art, right? You can bring a masterpiece into this room, and somebody who doesn't know any better would not know it's different from this art and a painting that was mass produced in a large size, right? So you need to be able to find the right kind of audience. And there are some circles that you go to that you'll be able to flip it instantly. So of course, if you want to get into art, you need to get into those circles. But art is one for me.
All right. I think we've basically just blown past our time. So I think I just want to use this medium to thank everybody for being a part of today's Drinks and Mics. Let's give ourselves a round of applause, please. Yeah. Thank you all so much. Yeah. So, of course, I did mention earlier that we do have, a lot of people who made this possible. Of course, want to thank the guys that you're seeing behind the camera here, the Nairametrics crew. Thank you so much. A round of applause to them. These are the guys that makes Drinks and Mics very possible. These guys basically stay late every whenever we record and then get home pretty late. But as well, very importantly, we do have partners, people who made this show, very possible for us. Apart from our regular, partners here, I did mention CFG. I mentioned Lead Drop and Swan Water, Codros Capital as well. I know he's always going to drop that. Let's also just thank Bamboo. I think we have somebody from Bamboo. We had CEO of Bamboo here. Yeah, let's have him come forward, please. Just give us a talk. Thank you so much for being a part of this. It's a round of applause to him. We're talking about investing in stocks, and I know that there are probably some of us here who use Bamboo as well. So, yeah, how you doing, man? Thanks, fine, thank you. Let's hear from you.
Oh no, just wonderful nights. Thank you, everyone. I think on just shameless plug, the personal finance side use Bamboo. We have US stocks, Nigerian stocks, treasury bills, and a bunch of assets on there that you can use to build your personal finance. And we have also like a lot of stuff that we do for rich people like you all.
like them.
So we have Bamboo Gold, Bamboo Black, where we curate the experience, your investing experience. So if you want to get started, after the show, you can reach out to me or my colleague who's over there. Thank you so much.
Thank you so much. By the way, personally, I've been using Bamboo for like 4 years now, and I have a sizable portfolio. I mean, in US stocks with Bamboo as well. So thank you so much for that. And of course, we also have Cowrywise, who also supported. And interesting that Cowrywise have basically morphed from. I mean, remember Cowrywise like years ago when Razak started this stuff, and it's incredible to see their progress so far. We have someone from Cowrywise as well. We want to give him a round of applause. Are you here? All right, let's hear from you, sir.
Now you.
Right. Thank you, everybody, and thank you to the crew of Drinks and Mics. I'm an avid follower and watcher of your show, and also converted my wife. So really want to thank you for bringing us on board. We are proud to be a part of this brand, and also in the realm of personal finance as well. I'll quickly say personal finance. I'll quickly break it down. Make money, spend money wisely, invest money wisely, protect your money, and give your money. And having said that, I also want to say that Cowrywise is one of the greatest aggregators of mutual funds in Nigeria. As of today, we have over 31 mutual funds on our platform, cutting across different risk acceptance criteria for investors. So that's from the moderate to the conservative and to the aggressive. I don't want to go into that. And you can always front load your income into a money market on the Cowrywise app. while you think about what to invest in. That's what I do. That's really helped me, and I think you can help.
All right. So in typical drinks and mic fashion, I'll just ask you guys to indulge me. Let's just all stand up and just clink glasses with each other for being a part of this. Thank you so much. And it's a wrap.
My name is Moyo, and I work as an accountant at a small business in Lagos. My kids have a nickname for me, Iron Lady. They say I'm always so strict with money and finances. They like to spend, and I like to save. So imagine my surprise when I overheard my kids talking about investing and putting aside money. I joined in on the conversation, and they showed me the Bamboo app and their own portfolios. I was shocked. So I asked them to help me download and sign up. I was worried. I started investing a bit too late. But with Bamboo, I've learned it's never too late to start investing. My goal right now is to leave a very, very healthy portfolio for my children to inherit. Don't tell them I said that.